Good morning, or good evening, or good afternoon, everyone. This is Tim Stout, and today is May 28th. I need a little sound check in the Discord if somebody can confirm if they can hear me, because I'm in a different microphone today. So just look for someone to confirm that they can hear me, and then we can kick it off. Good morning, everyone joining. This is Tim Stout. Just want to do a quick check to see if you can hear me. So if somebody wants to do the Discord and confirm if they can hear me well. I see people dripping in, so I'll give it a second as well. I think we had some issues with the link, but okay, perfect. Everybody seems to have found the right link now. Yep, so that's looking good. Thank you, everybody. Cool. So let's kick it off. Good morning, everybody who had a long weekend. Today is Tuesday, but it behaves, of course, like a Monday, so we might just get ourselves a little bit of a trading range at the open. It's also the open of the week, right? So on the weekly chart, we'll have to look at where we are so that we have an idea of going into the week what might happen, right? So I basically look at the weekly chart in the morning always, but especially, of course, on Mondays and Fridays because of the closing or the opening of the weekly chart. Small gaps on the weekly chart typically close directly at the open. And so if you open like a little bit above last week's high or a little bit below last week's low, you'll typically get that gap closed very quickly. Same on the monthly, but the weekly in particular, if that opens near last week's high, prepare for the gap to close. So if you, for example, get a big bull bar and it's still above last week's high, then that bull bar might be a trap because we're going to close most likely the gap to a week's high. So on the weekly chart, we are at a measured move. So I drew this last time I was in the room. The low here, let me get my data box. So the low of this week 44 from last year's low, 42.39, to this high, 47.88, measured move up is exactly to where we are now. This actually missed it, right? So this high on week 14, it missed that measured move by a couple of points. And then in the second attempt, bulls will always try things twice. In the second attempt, they hit that measured move. As soon as they hit that measured move, you see hesitation and profit taking. There was a bear bar or a bear doji last week, and this week we are opening close to that measured move as well. A strong measured move might be a magnet for a little while, so maybe a couple of weeks this measured move might be a magnet, which means if we go too far above it, we'll come back to it. If we go too far below it, then we'll come back up to it. So 43.3675, I think, is going to be a magnet for a little while. So the week is opening where the week was closing. We are trading at 53.25. The close of last week was 53.21. So little to no action, I think, at the open, or at least before the open. Let's take a look at the daily chart here. So we had that steep bull run up, and then a bear break of the trend line. It actually came almost all the way back down into this bar. So if you sold this close and you sold the high, you actually got out break even during the sell-off. And then we started to reverse up, right? We had a good 3 legs down, started to reverse up mostly from here. So at the start of May, we had that reversal. And then from here, we basically went up all the way until a new all-time high, right? And that's where we are hovering right now. So on the daily chart, Friday was a small bull bar closing on its high. It is a high one, right, after this pullback, but it will probably fail considering the context. So there's probably more bears at that high one than bulls at that high one. We had a big outside down bar. When was this? Well, this is Friday, Thursday, Wednesday, outside down bar with no follow through, right? Bears couldn't even get below the outside down bar. So if you get an outside down bar with no follow through, if you get a weak looking high one and you're getting all of this sideways price action, you're probably in a trading range, right? And that sort of confirms with our thoughts on the weekly chart that we're oscillating around this 5336. Well, if we put that here, it's already at the high of today. That 5336 number is somewhere here, and we're oscillating around it. Typically, that's going to go on for a couple of more days, at least 10 more or so, if this would be a strong magnet, and I think it is. And so chances are that we're going to get a lot of trading range days this week and the next. So we found buyers, but if we sell off, then the bulls will try again to go above the May 24 high to get out, right? So some bulls will be buying here for a swing. They know that it's low probability, so as soon as one of the days becomes another bear bar, they'll try to get out break even at their swing entry. But they're taking it just because we might get a sharp second leg up, and then you want to be part of that swing. So some bulls will have bought the high one, and today is going to show the bulls if that high one was a good idea or if that high one was a bad idea. So daily, so we're going flat on the 60-minute chart. So that is that strong sell-off from Wednesday. Interesting to see that it was only 2 legs, right? If it would have been stronger, then it would have gotten a 3rd leg down, but bulls already bought the 2nd leg down. So as strong as this looks and as strong as this was, it was only a vacuum and it wasn't even 3 legs down. Okay? So interesting to see that we are still not above that lower high. Okay, so that is 53.4150. And we're basically in the middle between the close of that leg and the high of that leg. Can the bears get a double top and can we come down? Or can the bulls get a breakout above that line? I think it's unclear, but I think we'll probably have to come down again and test this area of 5,300. That's on the 60-minute chart. So we had a big bull bar overnight, no follow through, not even getting above that bull bar, and then a big bear bar. We're now below that big bull bar. Bulls are scaling in to get out somewhere break even here. This looks like a trading range to me. And so probably, and more probably, because of all of these charts, we're going to get a trading range open. Then we can take a look at the 50-minute chart to zoom in even a little bit more. So here's the big up. You can actually see that on the 50-minute chart, that is 2 legs, right? So 1 leg here, this big bull bar, a pause, and a 2nd leg there to a new high, so it's a 2nd leg. This didn't get a new high, so it's not a 3rd leg, but then we vacuum down, and probably on this chart, the bulls have gotten a break even, or they just missed it. Okay, that's fair. So we might have to get up a little bit to feed the bulls out of their position, and then see if the bears can sell. So that is the higher time frames. We're trading 53.27. This is the chart from Friday. So we're trading currently around this price, around here. And so we're a little bit up compared to last week's close, but as last week was, like last Friday, was already a trading range. It had a lower trading range, it had a middle trading range, and it had a higher trading range that ultimately had to test back into the middle trading range, right? So that's the high, the high overview of this is you have an opening range here, a first breakout, and a second breakout, and a successful breakout above the opening range. That sets you up for at least a measured move of the opening range, and also it sets you up for at least a swing above bar 16. So 16 was the swing entry. Some bulls will already wanted to have a swing above 10, and that worked as well. Like we never touched the low of 10. Above 16, well, is this a strong trend day? Probably not, right? So chances are that you might not get 20 points above 16, but that it's more going to be around 10 points above 16. So 1150, 2150 is here, and we got a little bit more. We got probably 20 points as well above 6, so that brings 53.20. And here, this was 53.09. And did you get 53.29? No. Yep, just, right? So the swing above 10 was probably the swing that the bulls were using for the 20-point swing above 10 to the high of 22. And then the bears were selling. So this was a give up bar for the bulls. Bulls touching the moving average. It's about a 50% pullback from that leg. So you can trade this in different ways, right? You have a 50% pullback. Some bulls will blindly buy 50%, right? And then maybe 33% or 66, confident that it will bounce back to that 50%. Other bulls will wait for the signal bar and they'll buy the close of 29. Other bulls will want to buy a tick above 29. And some bulls will buy the midpoint of that signal bar as well. In this case, they couldn't. And then swing up. Now, as soon as you see 32, 31, 33, 34, you need to start thinking about disappointment, right? So 30 was not a strong entry bar above 29. And so I'm already doubting about the strength, because what I want to see is a bull bar that creates a new high, right? So I'm already a little bit disappointed by 30. 31 gives me hope. 32 disappoints me again. And now I know that this is not going to be a new start of a new bull trend. We're in the trading range. We're probably going sideways. We're probably going to go to the middle of 25 to get the bulls out break even from bar 25. Some bulls will have bought 21 close and 21 low. And so there is a midpoint there that bulls need to test to get out break even on 23. And the same, of course, for 25, where you can see some bulls buying the close, some bulls buying the midpoint, and that break even point is there. So as soon as I see this follow through, I know it's not going to be a strong new high and another 20 points up. It's going to be disappointing, and then bears start selling here as well. Bears arguing here that they have a double top or a lower high, and probably good. Bulls out, taking profits here on that midpoint, taking profits on this midpoint. Bears selling, wanting to go back to the 26 close, where some bears still had a position. And then you see here another bull bar that fails, and so more bulls buying below for a break-even point of that bull bar. So this bull close, that bull low, the midpoint is somewhere there, and so bulls are buying here for a scalp profit back to the break-even point. Right? So if you put your stop below 29 and you buy somewhere in here, you actually have 2 to 1 on bar 48. So bulls kept buying, and they kept buying again until they clearly failed below this higher low and below this higher low, and then the bears took over. Bulls managed to close the week still above the open, so it was a good-looking bull bar on the daily chart. But most of the day on Friday was trading range day, right? You can also say we have trending trading ranges. So you have a trading range. I have set the colors. I'll go get this. I probably want to use this then. So you have a trading range here, one range, then you have a trading range there, and then you have a trading range all across here, and it tests back into the trading range that was earlier there. So that is a typical trending trading ranges pattern, right? Where you have a lower range, a middle range, and then you get an upper range, but the upper range has to test back into the middle range at some point during the day. It usually doesn't test back into the first trading range, but if you have stepping stairs or trending trading ranges, what you'll get is that the third trading range will test back into the second, and that's what happened here at bar 67. Measured moves on the Friday, well, measured move above here was an obvious one, right? A measured move to the open here, measured move on this range, so double top and the top here, so that brings you there. There's a measured move probably here, there. There's a measured move on the downside to probably here, right? So that got hit. And then at the end of the day, we didn't have enough time to set measured moves there. Another way to look at it is to look at the hourly chart. So the low of the first hour was below 5. The close was here about 12. The bulls were trying to get to 530, 30, 50, but they failed. And so when it came back to their entry price, the 12 close, Some of them exited, some of them are holding and expecting that we're going to reach that price level today. So not, I think, a lot of spectacular price action on the Friday, but good enough. If you waited, you could have bought above 6, but I think the easiest buy was above 10 and above 16. Probably the one above 10 yielded you 20 points, and probably the one above 16 you might have exited at 10 points, or at below 22 you would exit, knowing that other bulls had already 20 points. So that is, I think, what happened on Friday. Let's take another look at the ETH chart. Still going sideways. The range is about 14 points, so an average Globex range, I would say. Let's see. The high being 39 and the low being 323.75. So let's put those into my chart. There we go. Globex high, Globex low. What is a possible measured move here at the open? I think you would look at this. So 533.525 would be a potential measured move on a gap up. And that's probably the magnet for the open. If we open around here, 28, then bulls will try to get to 533.25, 533.525. So that would be the measured move. All right, so I can't open the questions on the webinar today, but I can look at the Discord. So if you have questions, then please put them in the Discord, because I'm on a single screen here. I don't have insight into the questions on the webinar, but if you put them in Discord and you tag my name, then I'll be able to have a look at them quickly, because I can then just only review the ones where I'm being tagged in. So help me out and tag my name if you ask a question or have a comment that I should be reading. Let's check where we are trading. So what happened here in the last hour? Every bar was sideways in the last couple of hours. So basically since, where are we now? So basically for the last couple of hours, 3 hours, we've been going sideways in that 5328 range. And we're printing zebras here as well. So bull bar, bear bar, bull bar, bear bar, inside bar, attempted breakout, failure, attempted breakout to the downside, failure. And so there's a strong magnet here at 5328 that we're testing overnight. And we're basically going horizontal. If I look at the 5-minute chart here on the chart, then you can see how connected the moving averages on the hourly and the 5-minute are. This is the one on the 5-minute, and this is the one on the hourly. They're just smacking on top of each other here at 5328. So there's definitely a magnet there. This was a strong entry bar for the bears, probably some news, and it gave them 2 times risk. Yep. So there we go, 2R. But bull stepping in there for a failed breakout, and we're going sideways. Who owns the market? Pre-market, I don't think you can say bulls or bears, but we just had a new low and we didn't have a new high, so you would give probably 51, 52% to the bears and 48% to the bulls. The problem in these type of environments, right, pre-market, is that probably the opening bar of the E-mini is going to just surpass this whole range. And so this whole range becomes irrelevant as soon as the first bar is printed. Other than that, you can probably get a measured move up or down from it. So a measured move up or down would be from here to here. So that will be 53.37. And the measured move down at this moment would most likely be 53.20. All right, so let's see. I'm just going to leave it there and quickly get myself a coffee right before the open, and then I'll be right back with you guys. still hovering around the 5330, so just above last week's high. Remember what I said when I started the webinar. If we have a gap close to last week's high, in this case it's not even last week's high, but that gap will close quickly. The same counts for the daily chart. So if the daily chart is in a trading range, gaps will close to highs and lows. So if we're opening just a point or two above yesterday's high, in this case Friday's high, then there's a big chance that in the first hour we're going to come down and close that gap. So again, if there would be a big bull bar here now, then I probably wouldn't buy it just because of that gap and the trading range context, especially if we would open bar one or trade bar one very close to this measured move, then I don't think there's going to be bulls buying above it. I think that bulls going to take profit because of that measured move target. So there's a chance that we have that gap, that this is a bull bar, that it's closing around here, and that it's then reversing down to test Friday's high. So what other instruments do I trade? Well, I trade everything that moves, but I like most the DAX in the morning, the German index. The German index is the third largest in the world, so I like to trade that one. Sometimes it's quiet and it doesn't move very much, but there's always a swing somewhere in the morning, and I try to steal that. I then usually take a break and just live my life for a couple of hours, and then come back for the US Open. The US, I don't mind trading the Dow Jones or trading the ES. Sometimes I look at oil, but not a lot anymore. I used to trade it a lot, but not so much anymore. No, I just mostly follow the Dow Jones actually lately, and then ES as well. So for me, it doesn't matter. It's all the same, and I trade everything exactly the same. So you just need a little bit of volume, I think, to get the right patterns, right? So I wouldn't be in penny stocks or something that doesn't move, but if it's a futures market and it moves, then it's good for me. I never trade overnight or something. So I would never trade before the E-mini before the open. I would never trade the DAX after it's closing, right? So I stick to the regular trading hours only, and I never trade before, in my time zone, 3:30 or 9:30 Eastern. I don't touch it. So the measured move that I have on my screen is the 67 low from Friday to the 65 high of Friday. So it's this bear leg basically. It's probably coinciding with these two bear bars on the 15-minute chart. If we get a larger breakout, I would start to measure it from here, 2750, and then I would go to 2750. Then I would go to 5345.75. But I need to see it first, because I believe that if we open there, that we're going to touch down there or test down there and then go up that way. So let's see what happens at the open in 24 seconds. Last look at the Globex. So Globex is still going sideways, 5328. So if this is going sideways for a couple of hours, what do you expect from the open? Are you going to expect a bull trend from the open or a bear trend from the open? No, it's probably going to be a trading range, and a tight trading range as well. So we don't have to worry about the gap on the daily chart because we closed the gap as we are now inside Friday's range. So we can take that one out. Can we get to this range, 5335? Well, remember, we're still going sideways with Globex, and we're still a little bit bearish as we just made a new low. So we need to find out what bar one is doing. In the meantime, I'm looking at how bar one is behaving, right? So it was a bull bar for a couple of seconds. It was a bear bar. It was a bear bar on its low. And now in the third minute, it's probably a doji. So it's not behaving as a bear trend on the 1 minute chart. It's not behaving as a bull trend on the 1 minute chart. So on that chart, we're in a trading range. And that signals that probably on the 5 minute chart, we're also going to be in a trading range as well. So I'm actually expecting that we're going to go a little bit higher and then form another trading range. We are on the RTH chart, so on this chart, we're a little bit bullish, right? We opened with a gap up, and we're testing Friday's high. We're trying to break out above Friday's high. We're trying to break out above this middle trading range into a move up. And so on this chart, I would give the bulls the advantage. But if it's so much of a trading range, would you want to buy so far above the moving average here without context? No, I would want to wait a couple of more bars, especially if we're closing here so close to that measured move. Then there's a chance that we'll stall here and come back or go sideways around that 5335. Someone's asking, why do I not have yesterday's bars on the chart? Because yesterday was a holiday, so it doesn't count as part of the RTH. So I don't have, that is not considered as a day as well on the CME. There's no settlement. And so it's not considered to be a chart day, right? So bar one, as you can see, goes up a little, goes down a little. Currently a doji, 3 minutes in the bar. So are bulls in a hurry to buy? No. Are bears in a hurry to sell? No. And so the market is testing what the boundaries are of the trading range that it's developing. It's above trading ranges from Friday, but it's below measured moves from those breakouts. So it's right in the middle of a failed breakout and a successful breakout. You can see that hesitation on the chart as well. We have a gap up. The market is a little bit positive, but not positive enough to start buying for bulls at this point. Best thing to do is to wait. I wouldn't want to sell here with the gap up and the hesitation. I would want to be a buyer, but only at a good looking bull bar that is attractive enough and has a good enough target for me to start buying it. Right now, I wouldn't want to do anything with this bar because it's probably going to close very close to a doji. What do you need if you're buying far above moving average or average price? Well, you need a very convincing setup, right? Some setup that you can't leave behind, because if you don't buy now, you're never going to get this price again, right? That is why you buy far above average. No, buying here in a trading range is not buying at a discount. And with this hesitation, there's probably more sellers at the bar one high than that there's buyers. I don't think there's a 20-point swing above bar one. I don't think bar one is going to stay the low of the day. And so I'm hesitating, or I'm not wanting to buy above one. Look at the range before the open here on the Lobex chart. It was extremely sideways, and buying above bar one now would force you to buy at the high of that range. Okay. It's also got a big tail at the top, big tail at the bottom. So there's probably more buyers at the one low and lower. There's probably sellers at the one high, although they might show up only higher. The bulls have the market, and so they're probably going to buy the close for scalps. And the first scalp would be 32.50, and then the measured move, which is for 53.35.25. So if you would be scalping, I would be scalping to the long side. If you would be buying or selling for a swing, you would want to wait. And it's probably best to wait as well in general. Many times if you get a breakout, the pullback will actually show you what the breakout is from. Some ranges are very easy to find, right? An opening range and a breakout above an opening range. So that will probably get a breakout the size of the opening range. But some breakouts are a little bit more sophisticated, and so you can use the pullback to find out where the breakout was from. And so if I go to Thursday I think was a beauty, because we had this range here, and then we had the breakout. You can see that the first breakout was probably to the low of this range, but we just kept breaking out below that range. And when we then broke below this range, this is where we had a little bit of hesitation. And then when we broke it, we came down to test it, and it set a perfect measured move to the downside. And so I'm always looking at, even if I'm in the swing, where is the pullback? Because the pullback is going to tell me most likely what the range is that the breakout is from, if I can't tell by myself. So this was the measured move from Thursday. You can see that we started to form a trading range as soon as we hit it. Right? Okay, so bar 2, it's not outside down, it's just sell to close. We're pulling back to the breakout point. If the breakout point is here, then we're pulling back to there. I said I'm measuring that as the breakout point. So that high, the bear bar high, I'm measuring that as the breakout point. If we pull back to that breakout point or close to it, then I still believe that the measured move is on for 5335.25. Opening range typically is an hour. And most of the time what you'll see is that Globex might be bearish and the RTH chart might be bullish, and so it needs to go sideways for a while before both charts are in sync. And right now, if I look at the Globex chart, you can see it's sideways and a little bearish because it just made a new low. And the RTH chart is a little bullish because we have a gap up and a bull bar. And so the result is often a trading range. Bulls are scaling in below the one low for break even to the one close. Bears will try to sell below 2, but they'll probably not be able to, or the sell signal bar will look so bad that there's probably not a credible sell below 2. If you sell below 2 and it closes like this, your stop is either above 2 or above 1, which is the tricky part, right? Can you get 10 points below 2 minimum? That will be 2 here. I think the chance is unlikely. I think you're selling at the low of a trading range. If you look at it here, you're selling at the low of a trading range, and there's probably not enough bears below 2 to get us a swing down. I think the chances are still that we're going to go a little bit further up. We tried to break out above yesterday once. We're going to try to break above yesterday at least twice, and maybe the second time it's successful. If you have these trading ranges, then typically the large ranges are going to fail as breakout targets, right? Because most breakouts fail above a trading range. If you take, for example, the whole range from yesterday or from Friday, and then assuming that today is going to be a measured move above the whole range of Friday, you're wrong, right? Because it's failing. It's failing to break out. You would need 2, 3, 4 big bull bars at the open to make me think that that is a successful breakout. The smaller ranges, though, are more prone to have a successful breakout. So this small range here from Friday 65, 66, and 67, that's what I'm suspecting will be a successful breakout and lead us to 535. So in these types of environments, I'm always looking at smaller ranges because I think we can get a successful breakout from a smaller range. All right, 2 is a bear bar. Who's going to sell below 2? Nobody, right? With that tail, with the close inside of 1, that is a typical example of a failed breakout. It tried to break out below 1. It closed almost at the body open of 1. And so bears are not selling below 2. Bears are selling maybe the close of 2, yes, but they're going to scalp it. So they probably wanted that 5325.75. That's exactly what they got. So 1 to 1, stop above 2, selling the close of 2, 1 to 1 is exactly the type of scalps that they have. That is the type of scalp that I don't like. So close in the tight trading range, and so it's better to leave that to the algorithms than to start pursuing those things yourself. Because the problem is you're making 2 points, right? And your risk is there. Even if you have slippage of a quarter point, your trader's equation is already not working. The close of 2 is not a high probable sell. And so taking it for a 1 to 1 is probably not good trader's equation. The only bears that sold bar 2 were the bears that are trading the continuous chart. Because here it's a double top. You're hoping for a breakout to the downside and a measured move down, and you might get it still, right? But this is probably then the chart on which you decided to sell that bar. I'm looking at the ETH, sorry, here. So you would argue double top there, double top bear bar, and that's why you're selling bar 2, like only on this chart. The 5328 was important before the open. It remains important even after the open. It's the close of Friday's 21. Bar 3, another bear bar, but it's an inside bar in bar 2. Bears are trying again, but what is below bar 3 and bar 2? Friday's close, so it's very close to a support level. Are there any indications that this is going to plunge down 20 points? I don't think so. I think the gap is up. Bears will sell below 3 for a swing, but I'd be very hesitant to see if that would be a successful swing. I don't think it's going to be. So yeah, it's not for me. We're at Globex low. 90% of all days either goes below Globex low or Globex high, not necessarily both. I saw that the other week as a misconception. It's not the case that we're going below and above Globex, right? It typically chooses one of them. Sometimes it forms a double bottom with the Globex low or a double top with the Globex high and starts moving the other way. But 90% of days has a touch of Globex. Which percentage of days then doesn't have a touch of Globex? It's typically the ones where there's political events or big events prior to the open, maybe a CPI release or a big economic number or presidential election results that come in overnight. Those types of things typically generate a Globex range that is so large that the actual daily range might not surpass it on either side. So on those type of nights, overnight price actions, you might have a day where the Globex doesn't touch, where the RTH chart doesn't touch the Globex high or Globex low. Bears have a 15-minute chart here that closes on its low, right? So it goes to 1650. The swing for the bears is 1475, right? 10 points. And that will bring us exactly to one tick above 77. The bears are in this swing, right? So they sold one tick below 3. They need at least 10 points below 3 to get anywhere. Now, Friday is going to be support. So some bulls are buying here at support. The problem is there's no bulls stuck anywhere up here, right? So the bulls that bought the bar 1 close and the bar 1 low, they're already out break even. So I would be willing to buy and scale in at these levels if I knew that there was at least one bar of bulls and maybe 2 bars of bulls that are stuck or that want to get out break even. Then I would want to buy and scalp because then I'm confident that we're going to go into that range. Right now, nobody is stuck up here, right? They got out on bar 3. Can we come all the way down? We can come all the way down here to Friday's open. So some bears would have sold below 4 on a credible sell, right? Low 1, low 2. So they're selling a low 2 at a failed breakout after a big bear trend. And so that was a credible sell. They got stuck, and some bears sold higher, but also there, they couldn't get out. If they sold below the other bear bar, even then, they couldn't get out. So there's still bears stuck at the 52.98, and they'll be selling all across here to get back to that price and get out, break even on their first entry, profitable on their later entries. Bears want to get at least 1475. And bulls will want to protect that bar 77. Right? Why do bulls want to protect that bar 77 low? Because it's a higher low, pullback, and continuation. And so some bulls will put their stop here at the bar 77 low from Friday. So even if we come here, the bulls will try everything they can to get a double bottom with 77. If we now get a big bull bar closing on its high, the bulls will buy that bull bar and the bears will probably want to get out. Right now, the bears are holding for their swing and they'll stay in their swing. And they're hoping to get at least 1475 and then 0475 and then into this range from the opening of Friday. So always in short, 3 bear bars, 2 closing on their lows, but we're close to yesterday's close. We had a gap up, so it's more likely to be a trading range than a big bear trend from the open. Can bar 5 become strong enough so that the bears take the exit and that the bulls will take the market up for a swing? The low of the high of the day is often set at the beginning of the day, so very early on in the day. Bar 4 could be the low of the day, but I think this needs a small second leg sideways to down, unless it proves to be so strong support, Friday's close, that we're going to find bulls here. I think 3 and 4 were strong enough for a leg sideways to down. The bears are still hoping that we can get to 53.1475. On the Globex chart, we're breaking below that range, right? So if this closes bearish as well, then we can actually take that, for example, as a measured move range. Let me delete this and say, let's do conservative. It would go to at least 1875 and 1725. Yeah. So right now the bulls are buying with a stop below below Friday's 77 low, right? So if you put your stop here and you're scalping for example, Friday's high again, that's 1-to-1, right? So some bulls are buying here, putting a stop there, and scaling in, knowing that we're probably going to go to the highs in the open again. Problem for the bulls is that the bears have positions here, and that they have consecutive bear bars, that the first 50-minute bar was a strong bear bar closing on its low. And so the likeliness is that we're still going a little bit lower, unless bar 5 is strong enough for the bulls to start buying. It looks like the bears are in the bear swing and holding, and just need to overcome this support here at the close so that we can fall further down. So probably good to be short or flat. And if you're short, 1475 would be your area of interest to see what's happening here. If we just plow through it and go to the downside, then I think the opening range here is probably where we need to land. Bears can exit 1 tick above a bull bar. And people that are flat will probably want to wait to see what happens here in this range more. You don't have to trade in the first 4 bars. You can also just trade in after 10 bars or after 12 bars or after 14 bars, especially on the Mondays. So this is a pause, right? So bar 5 closes within 4. Sell the close is done now because this closes inside the previous bar's range. This is not one of the sell the close bars. So some bears will already take a scalper's profit. Some bears will hold and lower their stop to above 5. Because this is now leg 1. 5 is an inside bar and starts the leg 2. So we can actually measure, for example, what a leg 1, leg 2 range would be. This still looks good, right? So 5 is another swing short. No, I lost what I was saying. Oh yeah, Monday mornings are typically small ranges or slow price action unless there is big events that the market needs to digest. Mondays are typically quiet openings. And so on those quiet openings, you're probably going to get the best swings around bar 8, around bar 10, around bar 12, somewhere in that closing of the first hour, in the closing of that opening range. That's where you'll find the best trades on slow days. So you don't have to trade anything here. With the bull bar and the gap up, it's tough to sell below 3. You can just wait this out. There's probably going to be a swing to the other side as well. Once we hit these targets and start hesitating here, we're probably going to come back up. Or if this just starts selling off and off and off, you're going to get a pullback, and then you're just going to sell a low 2 or a low 1 and collect at least 10 points that way. Right? And that's nice. So then the market has a quiet Monday morning, you have a quiet Monday morning, you zip a little bit on your coffee, and you're waiting to see a good setup, and everything that's not a good setup, you just let it go. And then right now, if it goes into a bear swing 1475, just think, well, I saw it, but I didn't take it. That's fine. Still 75 more bars, right? Never worry about a missed trade. It also saves you the commissions. Coming close to the 1475. Can the bulls hold on to the 77 low? That's going to be the important question. So anywhere in here is a beautiful area for bulls to buy, because if they have a tight stop and a big target, who doesn't want to have a trade with a tight stop and a big target? It's going to be a high 1 though, right? Because this didn't trigger, so there wasn't a high 1 above bar 1. And so this is not a situation where after a sell-off it's a high 2. Like yesterday or Friday, you had a high 1 here, and then you had a high 2 here. And you can argue this was a high 2. You can also argue that this was a high 1. This was a high 1, this was a high 2. But a bull bar now closing on its high would form only a high 1. And the bears are selling the low 1 below 5. We're coming very close to targets. So it's going to be important to see, are we stalling? Are we forming a bottom here? Or are we just going to continue to sell and plunge right through and get down all the way to 97.50? I think 1475 here, we're going to stall. Somewhere in here, we're going to stall. And at least go and close the gap to the 3 lows or the 5 high, somewhere in that area. There's a gap here between the 3 low and the 5 high. If we're going to create another gap, that would be a signal of a strong bear trend, right? More than one gap would be a sign of a strong trend. I don't think this is a strong trend, so I think that the bulls are going to close these gaps to indicate that it wasn't a trend, that it was a leg in the trading range. So 2 times risk on bar 3 was 30.25, and 2 times risk is 15.50. What do bears on the 50-minute chart want? Well, bears on the 50-minute chart want, they already have the 18.50, 1-to-1, and they want at 53.12. They're probably not going to get 53.12. So 18.50 was their target. Since bar 6 closed above it, many bears on the 50-minute chart will actually take 18.50. Bears on the 5-minute chart still holding for a 10-point swing below 3, 14.75. You can see bulls are starting to scale in, right? Their stop is here or here, and they're scaling in, and they want 1-to-1. So if they buy with a limit order now, the low of 6, well, they only need to get back to bar 5 to get a profit there. I think we're still going to see 14.75. But it's getting worse and worse for the bears now. If this is a bull bar closing on its high, bears will immediately exit, and bulls will enter for the high of Friday. Two-legged pullback or three legs. 2 could be one leg, 3 and 4 could be one leg, and 5 and 6 could be one leg, and then you're talking about a wedge. Gap up, bull bar 1, and so above 7 could be a good swing long. But it's a trading range, and so it's a trading range where you probably need and have to scale in. But you can see what happens here with the bears that came so close to the low of 77, is that the bulls were just starting to buy. And they're starting to buy because there's value here, there's risk reward, and it gives them a perfect place to start buying. The low of 6 already was 2-to-1, right? So if you put your stop below yesterday's 77, you buy with the limit order the low of 6, you have engineered yourself into a 1-time risk, 2 times reward type of trade, and it could even go on. So you could have 4R, 5R, 6R. That is what limit order bulls are doing there. They find a stop, they find a credible target, and they just start howling in limit order longs to get a position that is risk reward technically a very good trade. Can you buy above 7? I think you can buy above 7. I wanted to close with not as big of a tail as it has currently, but you might need to be able to scale in. It's at least a bull signal, and it's good enough for bears to exit above or already exit as soon as it's forming. Bulls should at least close those gaps, right? So the gap to the 3 low is a gap in a trading range that if the bulls want it to be a trading range and not a bear trend, they have to start closing these gaps. They close the gap to the 5 high and the 5 low. There's one gap left, which is here. Bulls need to start closing that gap. Can you argue broad bull channel? I think you can, right? So bull channel like here, across this line, to the upside, maybe here, maybe here. It's unclear at the moment, but bulls are hoping that this is a broad bull channel and that we just touched the low of the bull channel. Bears are using the pullback here to exit break even. So some bears that sold somewhere 5 and 6, they're getting out break even. Bears that sold below 3, they're probably still holding. They are expecting a second leg sideways to down, which if bar 7 doesn't trigger, so if you don't go a tick above 7, is likely to happen, right? So leg down, correction, leg up, and then coming somewhere there. This is such a strong area of support, though, that I think with bar 7, a lot of bears will not be holding for another leg down. Better to sell that other leg down when it gets created, but you're in a relatively bullish market with a gap up and a bull bar. You get a good bar 7, credible low of the day, and so bulls will see if they can buy bar 7. You're always going to look for the swing early in the day, right? So you try to sell below 3. It goes a little bit in your way, but then it stalls. You're trying the other one. Maybe that is the one that gives you 20 points. And so a lot of these attempts early in the day will end up break even or giving you a slight loss. But eventually, with that technique, you'll be in the swing of the day and the one that goes at least 10, 15, 20 points. And so this is a credible double bottom 7 and 77. This was a credible top, Friday's high, and then the bar 3 low, sell below bar 3 low. And right now we're stalling, so more and more bears are going to give up. But where are the bulls buying above 7? Right? They couldn't even close 7 on its high. We haven't even gone above it, although we are 3.5 minutes into the bar. So where are the bulls? Do you pay attention to the 3-minute time frame close? No. Not when I'm trading the 5-minute chart, because then I would be trading the 3-minute chart, And for me, I only look at, well, I look at, of course, the 15 a lot, but I don't look at anything lower than the 5. Sometimes I do just to get explanation for myself or to see if something happened that I thought I was seeing. But during my trading, I never look at anything lower than the 5 minutes. Anything that you do outside of looking at the 5-minute chart is going to cost energy and effort, and it's going to take that energy and effort from looking at the 5-minute chart. So go into a tab to see the 1-minute chart, go into a 2-minute chart, adding an indicator. It's all going to steal time away from looking at the 5-minute chart. And I don't want to steal any time away from looking at this chart, and therefore I'm not looking at anything lower than this chart. I can infer higher time frames when I look at this. So if I look at the high here and the 3 close, I know what the 50-minute chart was doing. But to look at that, so will bulls buy above 8? That is now a bull bar closing on its high. So that would be nice if 9 can be a big bull bar above 8 and above 7. That would be nice. But you have to understand that focus is already very difficult, and long-term focus, so for about 2 hours, is even more difficult. You're going to lose focus if you look on your phone, if you have a browser open, surfing the internet, if you have indicators, if you constantly go back and forth between multiple time frames. It's all going to steal time away from your focus, your energy, and your concentration. And so looking at anything lower than a 5-minute for me is absolutely useless. And it's actually a bad, like I consider it for myself to be a bad habit because I'm not focused on the chart that I should be focusing on. Bulls are doing a medium good job, right? They have 7, they have follow through on 8. 8 was an inside bar, but it closed on its high. So it's a credible buy signal with a double bottom, Friday 77, today's 7. And so bulls will start to buy more on the stop above 8 and on the stop above 7. Bears still hoping for a second leg down. Bulls need to really get above 2, the lower high of the bears, to start thinking about a measured move up. And so if you're buying above 8 or 7, you probably have to scale in lower, but you're hoping that you're going to get a measured move here to 45.50, right? So above this line and then a measured move up. Most bears will like to have their stop above a bear bar, and so most bears will have their stop above 2 and not above 1. And so if the stops are here, then as soon as the stops trigger, the stop for the bulls is here and the entry for the bulls is there if they want a measured move up. And so for them, it's a 1-to-1 stop below 7, buying 1 tick above 2, and then 1-to-1 is the measured move. And that's probably, at least what I think, is how measured moves exist, or why measured moves exist, is exactly for that risk-reward reason. Dow Jones gap down. So big bear channel in the prior day, gap down, and measured moves being reached. Probably going sideways through this price. Every bar tested this price except bars 4 and 5. So as soon as we go above that price, we bounce back. As soon as we go below that price, we bounce up. And so sideways is the result on the Dow Jones. Let's take a look at NASDAQ. NASDAQ opened or close to prior day's high, then went above it and then sold off to below that trading range, trying to form a double bottom. And it has a little bit of follow through, but bulls really need to get above 3 here. Otherwise, we're going to sell off on the NASDAQ again. And then this whole pullback range will form a major move down to 18,783. So the buy signal bar didn't trigger. If bar 9 becomes another bear bar on its low, it will trigger a sell, and it will trigger a sell swing. But so if this triggers 1950, we start to having to think about price going down to this region, around here. Can the bulls prevent the sell from triggering below 9? Bears triggered the sell. What will the entry bar look like? It's a low 1 in a trading range. Bears are hoping that it can lead to continuation down. Like 1, like 2 would be to 950. If bulls can buy and force the bears out, the bears probably get another chance to exit below 9. Second leg sideways to down at the moment, and it doesn't look like the bears can get continuation. There was a doji follow through on the 50-minute chart, and so a lot of bears are giving up. Now, if this would be a strong bull bar 10, that could be the setup for the bulls that they want to buy. We never got above 8, so there's no bull stuck. We never got above 1, so there's no bull stuck, and we never got above 7. So the bulls are still looking for their first attempt to break above a bull bar. And it looks like it could be 10. I said best bars to buy in a trading range open are bar 10. I said bar 8, bar 10, and bar 12. This would be bar 10. So it's a very likely candidate for a swing long, especially if the bears that would be selling the bear bar on the low here below 9 are being forced out. Can bar 10 close on its high? Can it close higher than all of the closes here? If so, there's a good chance that it's going to take us at least back into this range for 53.29, back to the open, and back to Friday's high. "40 seconds left, and the bulls are closing the gap to the 3 low. Bulls that are buying above 10 would put their stop below 7. But 10 is disappointing. It's not closing above the mid. Is it closing at the midpoint? Okay, it's closing at the midpoint, but there's a huge tail above 10. The bears are stuck, right? Bears selling below 9 want to get out below 9. They also just want to get out in general, so they might have sold more 5 points higher, ready to. Did we get 5 points higher? 24.50. Yeah, we got exactly 5 points higher above their entry. And so they're scaling in 5 points higher and now want to get out break even on their sell below 9. So if we go below 9 and then reverse up again, now we know that the bears are out of a position that the bulls are wanting to buy, and then we buy above there. With the bears being out of the market and the bulls being in of the market, it can go very fast. Bar 8 is not triggered. No. Bar 10 is now the signal bar for the bulls, and bar 9 was the signal bar for the bears. Bears selling 5 points higher below their entry. And will they just get break even on the whole thing with bar 10 being so strong? If they did, then they're out, right? Then 22. But I think we're going to go a tick below 9 again and give the bears a break even on their first entry and 5 points on their scale-in. It depends what 11 is doing. So if 11 is not getting to the bears target, they'll just exit break even on the whole thing. And exit break even on the whole thing is here, 53.22. So bears now have the option, and they need to make the decision right now. Are we going to hold to make 5 points, or are we just going to exit this whole thing break even? Look at what's happening. We're almost there. And now we're there, right? So we have a leg down. We have a small gap from the 3 low now to the 10 high. It's a trading range. We're expecting that gap to close somewhere today. We have a failed sell signal with bears getting in 5 points higher and getting out. We had a sell signal here below 5 that trigger was disappointing and the bears got out. So the more and more bears are giving up on a deep swing short, and most of them are actually covering their shorts. But bulls never trigger a buy stop entry, right? It couldn't get above 8, couldn't get above 1, couldn't get above 10. And so although the bears are exiting, the bulls haven't found an entry yet. If bar 11 is another bull bar closing on its high, or at least far above its midpoint, then they'll try that one. They haven't bought above 8 because 9 never went above 8. Bulls buying here, stop below 7. Bears selling here, stop below 2 or below, above 2 or above 1, probably above 2. But I think bears should exit with what's happening here. And bulls are looking for their entry, and they still didn't get their entry. We're coming to that bar 10, bar 11, bar 12 window where we're going to find the swing of the day. You can see that none of the bears nor bulls are very strong today. The bears actually sold on their signal bars. The bulls never bought on their signal bars. You can argue that we went above bar 8 later, but that doesn't matter. Bar 8 triggered a buy signal, and it was a strong bear bar as a result. Right? If this is a strong bull signal, this is a bull bar. And bar 9 being a bear bar that opened where bar 8 closed, and it closed at its absolute low, is a categorically denial of a bull signal. So there's nothing here in 10 that was bullish. These were bears that were bears scaling in, trying to get out, and they made money. So if you look at the chart, who made money all day long? The bears, right? They sold the 3 low, they got into a swing, they sold below 5, they sold the close of 5, they got 2 times risk on 5. They sold below 9. They scaled in 5 points higher, and they got out with 5 points. So the only troop or the only team that is making money this morning are the bears. And you can't deny that, even though you're seeing bull bars here. We haven't triggered a single bull signal. That means that when we trigger the first bull signal, it might go very fast. But until we do, the bears are the only group that's making money. We're hovering around the close of Friday. So Friday's close is a magnet. Typical magnets take about 10 bars to get away from the magnet. So it's now 3, 6, 8, 9 bars around the magnet. And so it could be another bar or so before we're going to leave the magnet and find our direction. Bears are still in the swing short, below 3. We tested it once. If we test the swing entry again, those bears will exit as well. Right now they have a gap and they're in the swing, so they still want their 1475. But most bears that sold lower, somewhere in here, they probably are not holding anymore. They scaled in higher and exit. And so the only bears that are holding are the bears below 3. What about the range? Well, a typical range on a trading range day is 30 points. This was a little bigger, I think, 35, 40 points. And so if you look at the range today, 53.32 and 53.16, you know that that range is at least going to double, right? Or probably going to double. And the market is determining if it's going to double to the downside, to the upside, or both. It could go a little bit lower and then still make a new high, or it could make a new high and still make a new low. But chances are that this is not going to be the final range of the day. And right now it looks to be that we're going to need to test that high at least once again. On the 15-minute chart, the bears sold bar 3 and they got 1-to-1. There's now a bull bar on the 15-minute chart, and the bulls will buy it for a 1-to-1. And it's very likely that we'll at least touch the 3 low. The bar 12 close is also the close on the hourly chart, And that is, of course, a bear bar. It opened here and it closed here. It's a bear bar with a big tail. And it wants to have 1-to-1 to 53.12. But you can see as soon as that bar 12 closed, nobody sold it, right? In fact, bulls are buying the bear bar on the hourly chart and not selling it. So I still think we should be able to come into the new high of day, into the 53.30, 53.34 area. But as well, bulls have had no trigger of a buy signal bar. And most of it right now is limit order scalps. So bears selling above a bear bar, bulls buying below a bull bar, below 8, below 9 even they bought. Bears are now selling above 12 for a tiny little scalp. And so the scalps are actually getting smaller and smaller as well. They're now 2-point scalps and 3-point scalps and not 5-point scalps anymore. So it's a limit order market here. We need a breakout from this range. And right now it's actually relatively 50-50 if that breakout will be to the downside or the upside. Bears will argue that they need a second leg down the same size. On the 60-minute chart, we're printing a bear bar that also has this as a target, but the bulls are doing a good job forcing out more and more bears until we get a good bullish give-up bar. It's still only limit order markets here. So right now it's still relatively 50-50 whether or not we'll go up or go down. 5-minute chart, you would say would go up, but on the 50-minute chart and on the 60-minute chart, you would argue that we have to come down a little bit more. Moving averages also now on this chart right next to each other. The hourly moving average is flat. The 5-minute moving average is flat and almost at the hourly. So that's another indication that we're going sideways. And you can see that we're going sideways for hours. If you take the Friday range with it, we're basically going sideways around 53.20 for at least 6-7 hours now. If the bears print a firm bear bar here that closes on its low, it's actually a low 2, right? Low 1 was 9, and the low 2 would then be 13, but I don't think they will get one. We're waiting for the breakout. And you can see how the bulls are preventing at least the bears from selling. They're not getting signal bars, but at least they're preventing the bears from going down further. It's a cruel 6-point type trading range at this moment. Double bottom, double top. So it's breakout mode from the 7 low to the 10 high. But this is starting to become a bear signal bar. So can the bears trigger the 14 low? If so, then 725 would be the target. Right? We have a high here, we have a low here, the 7 low and the 10 high. And measure move down would be 725. So this was a signal bar, it triggered, and the bears had to get out. This is another signal bar, 14, for 750 and 725, around here. It continues to be a limit order market. The bears are selling the midpoints of 14, they're selling the highs of 14, but they're not selling the close of 14, right? We'll see value here, stop below 7, buying the close of 14. What would your target be if you treat this as a limit order market? Well, 1-to-1 is where they already are. 2-to-1 is 23.25. Stop below 7 and just buy the close of 14. And that is a limit order market. Bulls are buying bear closes, and bears are selling bull closes. So lack of triggering the sell signal and then coming up with a fantastic bull signal would be a micro double bottom a double bottom 77.7, and a buy above 15. Just waiting to see which signal is going to trigger. The sell signal didn't trigger. It triggered below 9, bear scaled in and got out break even. It didn't trigger below 14, so it never got in. Now there's a buy signal above 15. Will that trigger? Will that actually stay a strong buy signal? Will it trigger? And will it take us to the high of the day? Anything right now, a buy signal or a sell signal is a credible signal, and it can launch the swing of the day. Bulls are hoping, of course, that they can get above 2 and then get a measured move above 2. That's not unreasonable thinking, right? So that would take us to here, 45.50. First thing would be to get to the open. If you buy above 15, you would buy it as a swing, because a scalp so high in a tight trading range would be a bad trade, and so you would take it for a swing. In any case, you would not want to hold short one tick above 15. It would be the first credible buy signal that triggers, and it's a very good looking one, micro double bottom. After 10 bars to the magnet, we're about to leave the magnet. So with a bar like this, this could set up the signal to go higher, get a new high of day, and go into the range there. Still holding on as well to the broad bull channel, 16 low, 68 and 7. Let's draw that roughly like this. Put that to the upside. Could get to here. It could be here. That's what the bulls are hoping. And this has to get a strong bull entry bar, and you probably want to see it go into the 530-34 area. Should at least get 10 points on something like this, right? Hopefully 20, but let's see what happens at the highs. If we get a strong breakout above 2, pull back and continuation, that would be a measured move and the target up. But let's start with the basics. Let's see if bar 16 is a good bull entry bar and that we're confident enough to hold on to that long. I talked about this before. So if you have a credible buy signal and you're, let's say, 4 minutes into the bar, you should be considerably higher than the entry price. And if it starts to stall, it should not be stalling around your entry. This is the perfect example, I think, of a nice entry bar that's behaving really well. So it moves up a couple of points directly, and then if it starts hesitating, it's probably higher than the entry point. So with 40 seconds to go, this is a perfect looking entry bar. Let's see what it does in the last 40 seconds, but right now it's looking really, really good for the bulls. So there's 3 ways where you can look at swing targets. So you want at least 10 points, right? I mean, let's start with the basics. You want 20 points. So 24.50 plus 20 points is 44.50, right? That's all the way up here. So if you can, you don't want to hold anything before we get here. On trading range days like this, there is one swing 20 points, but most of them are about 10, right? So these legs are about 10-point swings. So let's mark 10 points as well. That's 24.50, so that's 34.50, so that you come here. Okay, so we have 2 possibilities. The third one is you want at least a profit equal to your risk. Well, if you put your stop below 7, you enter here, then you want at least 33.25. And 10 points is a little bit higher than that. So it looks like we're in a 10-point swing rather than a 20-point swing. We'll have to see when we get here what happens. But that is for now the entry that the bulls are taking and the target that the bulls are having. You can also look at measured moves here. So, well, the shortest measured move is actually the 15 low to the 14 high. That would be the absolute shortest measured move, and we reached that to the tick. So some bulls are taking profits already, but you're holding through pullbacks, and so you're still expecting higher prices. If we would get a big bear bar, then the bulls would try to get out at their entry price above 15. But right now, it still looks to go higher, and you probably want to see a measured move. The best the bulls can do is to get above 1, right? Because 1 was such a strong 15-minute bear bar, is that if we can get above 1, then we can go a lot higher. But right now, 15 was the signal, 16 was the entry bar. The entry bar is looking good, and so let's see what happens on the long swing. I said the bears already were getting out somewhere here. Will the bears get in again? I think the bears will want to see the 15 low break and then sell a pullback. I don't think with 15 and 16 being so strong that the bears are wanting to sell against this. Everything that the bears are doing here is to get out break even. Sell below 3, they just got out break even. Pull back to the breakout point. So tight trading range, breakout, pull back to the to the breakout point 17. 18 is allowed to be a small bear bar, right, for the bulls, but it's better if it's a bull bar. If 18 is a small bear bar, 19 cannot be a small bear bar, right? So you need to see continuation quickly after the pullback to the breakout point. So 17 is the pullback to the breakout point. And so if 18 is strong for the bears, that's not what the bulls want. If 18 is weak for the bears, that is what bulls want. And if 18 is a bull bar, that's what bulls really want. Right? And so interesting to see what's going to happen here. So close to our entry point, bears arguing that it's still the start of a second leg down because they haven't made a new low. But I do think that the market will find more bulls here buying than bears selling. Super quiet market today. Bar 18 is still making up its mind. Market today. Bar 18 is still making up its mind. But markets all in long after 15, 16. Markets all in long. We now have 16, 18, and even 17 closing above this tight trading range, so it looks like a successful breakout. As said, 18 is good if it's a bull bar. It's the smallest of bull bars, but it's still a bull bar. Bears get no follow through now. Can the bulls break out above 17 and set a measured move? Or will we fall back into the range and then bulls above 15 will exit break even? If that happens, still is likely that we're going higher. But you can't, in a trading range day like this, you can't give trades too much room. If they disappoint in a bar or 3, we'll be going out break even rather than holding, right? So you sell below 3, you see 4, you get hopeful, you see 5 and 6 hesitating and stalling, that's when you get out. You sell below 9, you immediately have to scale in and get out. You try to sell below 14, it doesn't even trigger, right? So here, we're trying to buy above a bull bar, but we never get the chance. The first time we get the chance, we have a good-looking bull bar. If we're now going to get disappointed by a big bear bar, we want to get out break even, 1 tick above 15. But let's give it some more time. It's 3 minutes to go. Bar 19 can still do all kinds of things. Right now, it still looks good for the bulls, and it looks like we're going higher. We just needed to close the gap there to the 14 high. Trading range days close gaps all the time. This is still a pullback from the breakout, and the breakout could continue now at bar 20, bar 21. We'll just have to see. Limit order bears are making money, and that's of course not good for the bulls, but the bulls are still holding at this point. Breakout failed. Bulls will try to get out above 15. We're at the midpoint of 14 as well, so the bears are actually here trying to get a break even. I don't think they'll sell 19. We're at the midpoint of that break even point. But when we get to above 15, you'll see that a lot of bulls will get out. And even if we break out, they'll buy again then above a bull bar. But this is just disappointing. I think 19 is disappointing. The stop is not hit, so we're relying on the stop. But bulls will scale in, just like the bears scaled in, right? Remember, selling below 9, scaling in 5 points higher, getting out break even. That's exactly what the bulls are doing now. 24.50 is what they bought. And so 19.50 is what their scale in will be. And then getting out at the 24.50. They didn't even have to scale in yet, right? So still looks to go higher, but it's not in a strong lag in the trading range type of way. If we get a new bull bar, it will be another long setup. And so the count will then be from bar 20. This is actually now a nice range. To break out to the upside would be 35.50. And to break out to the downside, so below 15, there's actually a range now to the low of 15. That is still pointing to our 750 there. You can see that the market hits almost the 1950. So will we hit 1950 and go back to the 15 high for a 5-point scalp? Or not even, right? If we don't even fall 5 points from the entry point, then the bulls are relatively strong still. Now, of course, 19 is disappointing enough to probably want to get out on your entry and see if there's a new entry. Small bull by 20. Triggered the 5 points scale in. No, it didn't trigger the. Yes, no, it didn't trigger the scale in. Bull still trying. Bear still failing. But it's moving very slowly and very sideways. I still think we can get a new high. But I am disappointed by the follow through on 19. Or I'm disappointed by 19 that we went so far back down. So I do think that we're going to come back up to the 15 high again. And then see if we can develop a new buy signal bar, because the one on 15 didn't work, right? We're coming up to the close of the second hour. This is bar 21. 24 is the close of the second hour. The bears have gotten a couple of points. The bulls have had one signal bar triggered, and that went to a break even. The second signal bar was 20, and we went above 20, obviously, 22.75. So that would be 32.75 or 42.75 for a swing. I still think we're going to get a new high of day. And the bulls need to break above this range, and that would be perfect for a measured move up to 36.25. Remember, we're still going to double at least, or at least extend the range of the day. The daily range is small. Chances are that we're going to extend the daily range. Right now, if you ask me, it will be to the upside and not to the downside. This is a credible low of the day, bar 7. But you can also see that the bullishness is not relatively prevalent, and so it's going to be a trading range. There might be a big bull bar and then another trading range sideways, just like yesterday or Friday, where we had a range here in the lower section, a sudden breakout, and a new range in the higher section, and then a test back into the lower section. 3 trading ranges, a low one, a middle one, and an upper one. And then if you're in the upper one, you can suddenly get a test back into the middle one and then close in the upper one. That is possible today as well. We had one here. We had one here. We might get one here that tests back into the opening range. I think the opening range could be a magnet towards the close. But right now, I still think we're going higher. And we should at least get above bar 1 as well. Days like this, it's easy to forget the rules, right? The rules is don't lose money, and then make money, and then make a lot of money. But make a lot of money on a day like this is not possible. And so don't lose money is the best thing you can do. And then make some money is probably what is possible here as well. But if you trade it properly, and you only sold in here, and you only bought in here, you would have only broke even or made money, right? And so sticking to rules and procedures is very important in trading ranges like this because of the probabilities, right? It's easy to lose a lot of money here, no skill into longs here, and then get out at 14, giving up on the longs, and then here getting out on longs on 19, and then scaling into shorts here on 21. Those are things that you don't want to do. So it's best to still keep a quiet mind and a couple of good breaths, and the setup will come, right? Even if it takes 2 hours, the setup will come, and there's going to be one bull setup here soon that's going to yield that 10-point swing. You just got to stick at it and stay relaxed and don't do stupid things. Don't oversize on a stupid scalp or something. Don't do stupid stuff. The setup will come and it will yield you a reward for your patience. And that is typically what a range like this is doing to people. Very easy to lose focus and lose concentration and get lulled into this sideways range. And then before you know it, you're going to miss the breakout to the upside or the downside, and then miss that swing that you've been waiting for 2 hours now. So just be patient, stick with it, and accept that these mornings and these Monday mornings, because this is functioning like a Monday morning, even though it's Tuesday, that those are part of the routine. I said bulls will probably want to get out after bar 19, so the bulls that bought above 15, disappointed by 19, they took their break even. Other bulls bought the 20 high as a signal bar, not a good looking bar, but a bull bar, and it closed as a bull bar. And so they are in a swing at 22.50, trying to get to a new high of the day. Bears, I think bears are scalping only above prior highs, and nobody's holding at the 19 close. They'll exit it above 20. So bears are at this moment only taking limit order scalps. Bulls at this moment are taking limit order scalps, and they are trying to swing to a new high, but still failing. I still believe we'll get to the 5.332, 5.338 region. But in this tempo, what did we move? We moved 12 points in 2 hours. It's like there's a party on Wall Street and nobody's doing the markets today. And they didn't invite us. Monday mornings can be slow, so if Monday is a holiday, then Tuesday mornings can be slow. But this is slow with a capital S. Gets better if we go above the 19 high, right? There's a lower high here for the bears. If we then go above this high, then we're breaking 2 lower highs from the bears, and that would lead to a measured move there, 36.25. You put your stop below 15 now on the buy above 20. You just want 5.328 for 1-to-1. So I think we're going to these regions, the high of 9, probably the high of 2, maybe here. We'll have to see what happens there, whether to take profit quickly or whether to let our profits run. We prefer, of course, to let our profits run. We need at least 10 points to get something of dinner. So 32.75 in this region, and right there, that will be nice. And then 42.75 for 20-point swing would be nice, but we need to take a look at the different targets. So the 9 high, if that forms a double top, we want to get out of longs. If something is stalling here at the open or at the 2 high, we might want to take profits, but we're trying to hold on and take profits higher and get at least 10 points above 20. You need to maximize your profits as much as you can, because profits today are covering for future losses, right? And so we want as much profit as we can today to cover our future losses. And so we don't exit too early. We exit not earlier than the 9 high, the 2 high, or at a new high of day. Again, disappointing 23. We have to get above 19. Have to break that 19 high. Probably going to happen now on 24. Remember, 12 was the close of the first hour, and 24 is going to be the close of the second hour. The second hour opened at the open of 13, and so it's a very small bull bar with a big tail above. If 24 can close here, then it's a bull bar that closes on its high. So right now it's an hour that looks like bar 10. We want an hour that looks like 15, so that the gods of the higher time frames are with us and can drive the price up as well. But look at what the 50-minute chart is doing. Two strong bear bars, haven't even gone above the high of that bear bar. No other bear signal bars, right? So they sold below here, they sold below there. They got 1-to-1. They didn't hold for 2-to-1. They had to take 1-to-1. But we need to get above bar 1, so above bar 1 here, to get above this big bear bar. And it's not going quick. And this bar has followed through a little bit, but it's not looking too strong for the bulls here on the 50-minute chart. So I do think we can come higher, but what if 24 is also disappointing when 23 was already disappointing? I want 23 to be above 19. 24 is also going to be disappointing. 25 is going to be disappointing. More and more bulls will give up, and the result could be a bull give-up bar, a strong bear bar by the bears, if we don't break the 19 and the 9 high quickly. That is what could happen. Can we break the 19 high? You can't give the bulls too much wiggle room, right? If they can't do it, they can't do it, and then you're just flat. Right now, 21 was good. 22 was good. Big tail at the bottom, so bullish pressure. 23 was good, but 23 should have touched at least the 19 high. 24 is disappointing. It's almost an inside bar. Maybe it can do one more tick and become at least a bull bar. But we can't get above the 19 high. 24, bull bar on the hourly chart, but it's an inside bar. So here is the hourly chart, or here is that hourly chart. So bear bar, bar 1, big tail at the bottom, didn't break any previous lows, and now we have an inside bar. And so will there be bulls above that inside bar, or will there be bears on that inside bar trying to get back to the close of bar 12? Well, we'll have to see. The hourly close is always interesting. Sometimes it accelerates quickly on the hourly close. I think there's bears that sold bar 12, the close of the hourly bar, and that see this inside bar and want price to come back to the 12 close so that they can exit. A lot of bulls will want to buy an inside bar, but also know that they might have to scale in lower. And they would buy it for 1-to-1, 32.50. Is in the neighborhood of our 32.75. So we have multiple targets now close to 32.75. And so I'm wanting 25 to be a good bull bar and get more confidence that we'll actually get to the high of the day. A little bit more juice in the bull movement. At least took up the 19 high. Will we be able to take out the 17 high? Remember, on some time frame, this is a bear trend, with this being a major lower high and that being another major lower high. And so taking out these lower highs is important because there might be stops there, or at least it breaks the cycle of lower highs and lower lows. So you need to take out that one. That we did. So the market is either in a bull trend or a trading range. And if we can take this one out as well, chances are that we're going to get a measured move to the upside. Now bears scale in at these highs, so even if you, for example, sold the 19 close, you sell the 19 high, your break even is 23.50. Just touched it, I think. No, one more tick to get out break even. This is what the market does when there's no traps. And so the bears are calmly scaling in above bars. They're selling closes, they're scaling in above bars, they're taking limit order scalps. The bulls are calmly buying here signal bars and buying lower. And then when they get back to their entry, they take a profit on the lower entries. And so nobody really gets stuck anywhere in this cycle. And so that's why the market is moving so calmly. Because for sudden breakups to appear, you need to have one side that suddenly gets stuck. And if bears get stuck when bulls are buying, bears are buying as well. Double buying pressure moves the market up really quickly. And likewise for a bear breakout, if the bulls are selling and the bears are selling, you get double selling pressure and the market drops quickly. In this situation, everybody's calm, scaling in, taking profits, scaling out, selling below 25 for a bear swing, selling more higher, getting out break even, until there is a trap, and that will form the breakout. Question: 3 times strong bulls did a lot of buying, bar 7 and 10, see, and 15, big at 15, see. They're not going to let the market fall until they double bar 15. I disagree. I mean, yes, bulls will buy 15 and above 15 and the close of 15, and you would think that they would hold until they reach their profit target. But you also need to trade the chart and not your hopes and dreams. And so when you see 19, you think that what you thought was going to happen, a breakout to that target, is probably not going to happen. And so I think at 19, the bulls decided to try to scale in 5 points lower. Now, they missed it to a tick, so they couldn't scale in 5 points lower, but they certainly exited on their break-even position 15 close and a tick above 15 during 21, right? And so that swing is a break-even. I don't think they're holding. I don't think, yes, we're going higher, but it's not based on bar 15. The second time that the bulls got a chance to start a swing long was above 20, and they bought that as well. 21 was a big bull bar. It helped the bulls here to get out. And some bulls got out above 15, and then during 22, they got in above 20. So I think this swing long is now above 20 and not above 15. And so that's why I'm looking at 32-ish, because that will be 10 points above 20. But I don't think if you see a bar 15, that the bulls buy that and they're just going to hold forever, like fill or kill, profit or stop. No, I think after 19, these bulls act and think, continuation of the sideways trading range and not a bull breakout. I need to act and get out. And that is why trading ranges are so forgiving, right? That's what Al means when he says a trading range is very forgiving. You can sell below 9, you can scale in 5 points higher and still get out below 9. You can buy above any bull bar here, and the first one you get is above 15. Scale in this case, you didn't even have to scale in, get out break even, and you can buy above another bull bar, right? And you're still in that swing. You can sell below any bear bar today, and you'd only be stuck here below 19, right? But you probably sold here below 17, and so that was 24, and so you got your 5 points. No, you didn't get your 5 points, but at least like you're able to get out break even if you sold below 17. Sell below 25, that might be now a possible trap, right? And so if that stays a trap, if we go above 17 right now, then there's a trap below 25, and then the market raises up. But until now, every bear who sold below a credible bear signal bar got out perfectly break even, either with a 5 points scale in or just break even from their entry to their exit. And right now, this is the first possibility of a trap where bears might have sold below 25. If we go above 17, that's where they'll have their stop, and that's how we can raise to a new high of the day now. So this is the first possibility now of a trap. Well, many times as well during the open, the first thing I'm trying to find out is what type of day are we having, right? Now, if I saw this before the open, this tight trading range on the Globex chart, well, 90% chance it's going to be a trading range at the open, right? When I saw bar 1, I said, look at how bar 1 is forming. It was a bull bar at some point. It was a bear bar at some point. It was a doji at some point. And so it behaves very much like a trading range. Bar 2 is a bear bar with a big tail and a close inside the range of bar 1. Another indication that it's a trading range. Bar 3, okay, can this be a bear trend from the open? Bar 4 gives a little bit of hope, but bar 5, an inside bar, eliminates that hope. And so the day is going to be a trading range day. Okay? At least the first couple of hours and at least the first 2 hours are going to be trading range. Well, I only trade the first 2.5 hours. So I'm on the mindset of trading range. And so that's what I'm trying to do. And so if I'm convinced that the day is a trading range, my trading range instincts kick in, and it's going to be scale in, scale out, scale in, scale out, take a credible entry, hope for a swing, but be aware that on disappointment, I might have to exit very quickly. So I quickly make up my mindset and say, trading range. I'm going to trade it as a trading range. Buying the magnets, so there was a magnet here. If there's a strong magnet, the market is going to test that magnet about 10 times, about 10 bars. And I said during 14 or 15, I said somewhere in here, we've now tested this magnet, Friday's close, long enough. We're going to break away from this magnet soon now. And then 15, 16, we broke away from that magnet. We tested it one more time, and now we're probably on our way up and not going to test that magnet anymore. So there's instinctive behavior that you need to ingrain. You see a trend, your mindset just goes into trend, right? Low ones, low twos, bear trend, breakouts. You see a trading range, your mind just has to go into trading range, okay? Disappointment, exit. Disappointment, exit. Good setup, enter, scale in lower, scale in higher, etc. So you just, it's going to be a trading range until it's not a trading range anymore, right? And so every bar, you evaluate, did this change my premise that the day is going to be a trading range? No. Okay, then it's still a trading range. So that's the Forrest Gump philosophy, I guess. But early in the day, it's like a puzzle. The earlier in the day you can unravel what type of day it is going to be, the better you'll be trading at the open, right, when there's most movement. Slowly but surely, the bulls are creeping up. Consecutive bull bars on the 15-minute chart. But that one high is mean and sticky, so the bulls need to put more gas to the pedal to break that one high. For now, it's still good. It's not a wedge. Bar 26 broke lower than 23, so it's not like 1, leg 2, leg 3. I think this is a new leg 26. Slowly but surely moving higher. No urgency. But consecutive bull bars now on the 50-minute chart. Consecutive bull bars now on the 5-minute chart. And lack of consecutive bear bars on the 5-minute chart. So the market has shifted since bar 20 and is becoming more bullish. Although it's going very slow, I would call this a slow pullback bull trend, but it's moving higher and it's going from the left bottom to the right top. And so it's a bull trend. What bulls need, though, is a new high, right? They have a new low, but this low has not made a new high yet, right? The high is still from the leg from the 15 low, to the 17 high, and we have a pullback to the 20 low, and we don't have a new high yet. The bulls need that new high as well, so that they can raise their stop, right? Raise their stop to the 20 low, or they might even raise their stop to the 26 low if we get above 17. We take another look at the other markets. So take a look at the Dow Jones. Oh, that's stuck in a very tight range as well. Zoom in a little bit, 980 to 80. So that's a very small range for the Dow Jones, 100 points. I've seen 5-minute bars that are 100 points. But we have, if we break out to a new high, or if we break out to a new low, so breakout mode, and the bulls were getting above this high. They were buying here above 20. Got disappointed, I think, by 25, so they bought again above 26, and that would be for 50 points, so that would be 63. So they're trying to get somewhere to this region and then into Friday's range. Dow Jones, I think, is always in long. I mean, we're kept down by the moving average, but consecutive bull bars, breaking highs of the bears, it looks like the Dow Jones is always in long. Nasdaq just made a new high. Well, if you make a new high, you're always in long, right? Every bear is losing money if you make a new high. That's just the law. But how many legs do we have? We have 1 good leg, 2 good legs, 3, maybe truncated a little bit, so it could be a wedge. But this is holding up. It's a small pullback bull trend, so it probably can go a little higher still on Nasdaq. There was one guy lately who says, you always forget the Russell. I know. RTI, right? Yeah. And he is right. I always forget the Russell. Never forget the tiny ones. So that is on its way to a measured move 2085. And it's almost there. So this bear leg, we broke above the bear leg, we pulled back, and then we continued. So that is on its way to 2085-ish. And then the high, that's looking quite bullish there. Let's go back to our E-mini. Still stuck. It's like Memorial Day is 2 days these days. 50-minute chart on the Globex. I want to get this line out. Yeah. Bears sold this bar, right? They sold that bar. They got 1-to-1. They wanted to hold for 2-to-1, but they had to take 1-to-1. So there, they took profit. There probably was a measured move here, right? 1, 2, and missed. And now the bulls need to get to the high of that bear bar for a possible breakout measured move up. But you can see how slow it's going here on the 15-minute chart. We're hampered a little bit by this moving average, okay? But it looks to me that we're going to hit that high, but not a breakout. And so we're probably going to stall in the 53.33 area. And then the bears are hoping for a double top and another leg down. And on the 60-minute chart, we had a leg 1 and a leg 2, and we're holding below this bear lower high at the 53.40. And the bears on the 60-minute chart will want to protect that because they are in need for a third big leg down. So 1 leg, 2 legs, and then they want a third leg down. I think it's unlikely that they're going to get that. I think it's more likely that we're going to visit that high, 53.40.75. But it's an hourly chart, and sometimes there's not enough hours in the day to get to those targets. So that could well be something for tomorrow or a day later in the week. But it could also happen today, of course. It's only 15 points up from here. Could be 1 bar. But with the current price action, it doesn't look like we're going to accelerate quickly to 53.40, although it is still a possibility, right? The low of the day is 53.16, and so 30 points higher is that 53.40. We could still get there today, but it would need to come out of a strong breakout with follow through, rather than what we're doing now in a 1 point range, dancing up and down. If you're long now, where would you have your stop? I would not want to see price come below 20, right? You can keep it below 15 if you want, but I just don't want to see price come down below 20. But it's either below 20 or below 15 for a swing. In video 16F, oh mamma mia, Dr. Brooks says that a trading range tends to have both the beginnings of a bear trend and the beginnings of a bull trend at the same time. Using the RTH chart, it looks like we're in a bullish trend, but using the ETH, we're clearly in the bear channel. Is there any way to use this info to better determine what to do and not to do? Yeah, if charts are misaligned, and so the RTH chart here is in a broad bull channel, right? And the Globex chart, this one, well, it's not clearly in the bear channel. Come on. If anything, we're trying to redraw the bear channel, and we're failing. But if this is strongly bearish and this is strongly bullish on the prior day, I tend to give more weight to the most recent price action, but it needs to be clear on the Globex chart as well. So the result is often actually a trading range. If two charts are in disagreement, or if the 50-minute chart is bullish and the 5-minute chart is bearish, it often behaves like a trading range. It takes a while before the higher time frames switch over into the same trend. The trend begins on a 1-second chart. It goes into a 10-second chart, 1-minute chart, a 5-minute chart, 50-minute, 60-minute, daily. And before you have the weekly chart in the bear trend, a lot of it must happen, right? So the flip over from bearish to bullish also on other time frames takes more time, and in the meantime, it's often trading range type of behavior. All right, we could accelerate above the 17 high or stall, right? Don't want to jinx it. But it might just be a big bull bar above 17. I want to see us get to 32.75. Bulls need to get at least a tick above 17, right? A double top is not good enough. A double top is a reason for the bears to short. They need to get a tick above 17. A tick above 17 is not a double top. A double top is a double top, right? So a tick below is also not a double top. And so bulls need to get at least one tick above 17. The market is so precise that you can count on those things to be super precise as well. And so one tick above is a broken double top. We're getting reports that Houston has a problem. And so very close to Brad Wolf, there's actually power issues. And so Brad, who was scheduled to come in after me, is probably now riding the waves of a tornado or something. And so I'm going to stick a little longer to see if he is able to come back in, or that he's landing in Orlando from his thunderstorms directly. But we'll see. Let's hope everything is all right where he is, and he's not hosing out his trading laptop. He'll probably give me a message as soon as he's ready. But until then, you know what's going to happen. As long as I'm here, the tight trading range is going to continue. So, yeah, I mean, we'll see. I think 31, disappointing that it didn't get to the high of 17. It's not a complete double top. I don't think bears will sell below 31 aggressively. You can argue it's a wedge, 20, 21, 26, 27, 28, 29, 30. If it's a wedge and you're long, you could exit, thinking that bears might sell a wedge top and that will go lower. It's it's questionable, right? Swing above 20 high still has some room, but this is a possible wedge double top short. And so you might exit longs. You might see what 32 looks like. But I wouldn't sell this, at least, right? Question L states that by bar 18, there's an 80% chance that you've seen the high or low of the day. Given the current situation, would only a strong breakout to the upside reason to be long at this point? Well, mind you, there's a third. So first of all, yes, there's a big chance that you've seen the high or the low of the day. That doesn't mean that we now still have to get a new high or low of the day. So the bad news is we can stay inside this range all day long and never get a new high or low. There's also still at least a 10% chance that we're going to get a new high and a new low, or a new low and a new high. And the days that come into play for that are actually trading range days. Days that have a lot of sideways trading will find sellers when they reach a new high late in the day, and they'll find buyers when they reach a new low late in the day, right? Because everybody at that point is betting on days being a trading range. And so you can easily get a new low and a new high. And so the fact that you've seen the low or the high of the day doesn't necessarily mean that you still have to get a new high or low as well. I'm thinking 7 has a good chance to stay the low of the day. I said it when it was forming, and I said it when we saw bar 15. But doesn't necessarily mean that we're going to get a new high. We can stay in this range 4 more hours. But I do think at some point we're going to hit the 1 high and the 2 high though. But that statistic means that there is chances, but its statistic also means that you can still get a new low and a new high after bar 30, right? And so right now, the annoying thing about that as well is that you're probably exactly in the middle, right? Yeah, look at it. 2350 is the middle between 1 tick below the low and 1 tick above the high. And so there's not even a trade based on that characteristic. Okay, so maybe the high is in, maybe the low is in, but you're in the middle. So what does that mean? It's 50-50. You can't decide if it's the low or the high. You're in the middle. And so you don't have an edge, right? It's not strongly bullish or bearish, so you don't have an edge to trade stop here, target there, or stop there, target here. I think it's 50-50. And so you don't have a good trade based on that statistic. If I shorted 31, I would put my stop above 17. But this is still a small pullback bull trend, right? It's also a small breakout bull trend, which is more the characteristics of a small pullback bull trend, right? Everybody likes a small pullback bull trend. If the breakouts are big and the pullbacks are small, that's fantastic. The problem is it's small breakouts as well. So nobody minds the small pullbacks. Everybody is disturbed by the small breakouts. So it's actually a small breakout bull trend rather than a small pullback bull trend. But it is that, right? We're holding above the moving average. Every close since bar 21 has been above the moving average. We're tilting to the upside. You can argue a little bit of a triangle. That double top 1731 is not ideal, but I think we're going to break it, and I still think we're going at least a little bit higher. Small pullback bull trend. Many people struggle with relying on their stop. And so if you're trading small pullback bull trend, you probably want your stop below 20, now below 26. And if you get a new high, you probably want to keep it below 26. And then if it gets below 32, you get a double bottom new long. But a small pullback bull trend its character is that it's never going to go below that bull stop. And so you have to trust your stop. So you have your stop here, it goes up, you get another one. Your stop goes here, you get another breakout, you can raise your stop. Small pullbacks bull trend don't break stops. And so it's actually easy to trade. You just enter anywhere and you put your stop at the right place and it never gets hit. And then you just start looking for targets. So a target for this small pullback bull trend is to argue and to look at where did it begin, right? Well, it clearly began above bar 20. And so the first thing is to look for bar 20. What is the swing target above 20? Well, 22.75 would be my entry. So 32.75 would be my minimum target, a swing, 10 points. And 42.75 would be a 20-point swing. So I'm not going to do anything until we get into those regions, because that will be the minimum swing target. On this whole small pullback bull trend, wherever you enter, the first, like the entry point of that swing would be a swing target. You can see the same thing here on Friday. Not a small pullback bull trend, but the same thing. Bull breakout to a new high, so the market is always in long. Bulls buy above 10 and they buy above 16. But the first bulls, the bulls that bought above 10, they get the 20-point swing, right? And so they buy 53.09, they get 53.29. You look at that. The high was 29.25. So they got exactly 20 points. And so if you're trading anything like this small pullback bull trend, just look at the first entry, right? The first entry here was 20. And so 32.75-ish is probably where we're headed. How much above a bar would you put your stop? One tick. I don't know, the stop goes above 17, you put your stop one tick above 17. The E-mini is so incredibly exact that bears would not let this come one tick above that bar if the stop is there, right? And so if it goes one tick, you're stopped out. New touch of Friday's high. Biggest bar in, 12, 13 bars. So some profit taking for sure at the 33 close. But I still think that we can go higher. If you bought above 20 though, you have 1-to-1, right? So your original stop would have been below 15, buying above 20. And then one tick above 20, stop below 15, you now have 1-to-1. It's the minimum requirement for a trade in a trading range, that you get 1-to-1. And so there's a lot of profit taking there. Does the DAX operate with the same precision as the E-mini? Yep, absolutely. And the ESX and the Bund and all of those European markets, FTSE, you can get the data. And that's, I think, that has changed, right? So in the last decade or so, the pricing of futures have become incredibly exact. And so all of those points are now like so exact that in the time of Al, when you started trading in the end of the 80s, early 90s, you probably had to approximate a little bit more, right? So a measured move is almost a measured move was a measured move. But in today's day and age, these measured moves are incredibly exact and to the tick on all indexes that have enough volume. So DAX, Bund, FTSE, even the CAC 40, the French one, they'll all have incredibly exact moves. So that's just, the algos are incredibly exact. They don't do approximate measured moves and approximate targets, right? They do exact or nothing. So I think, let's see if we have Rose in the room. Because, ladies and gentlemen, I have to catch a flight. And that flight is going to take me to Orlando for the conference. And so if our good friend Brad doesn't come out of the storm quickly, I'm going to have to transfer it over. But bears want this to be a low 1, like it would be a low 1 on the 50-minute chart. It's a wedge top, it's a profit target. Bulls will get out one tick below 34 because it's way too bearish. You can argue leg down, 2 legs up, and sell signal bar. I don't want to sell this. I want to see it go below 26 first. Didn't even go below 32, right? And if you think about it, 32 was a bull signal bar. The bulls that bought the close, oh, I would have thought that they got 2R. Okay, fine. It's got 2R. Okay, fine. So bulls getting out below 34. The all-in long breaks below 26. So this is a leg pullback, leg 2. If one higher low breaks, it puts the market into a trading range rather than a bull trend. But if two higher low break, right, so this one breaks and that one breaks, then you're probably all in short and you're probably going lower. So I would not panic below 32, but I would not want to see the market get below 26. And in this case, I would get out thinking that we just might continue, and I would get back in quickly if this fails and we go further up. 12 bars to go up 9 points, 1 bar to go down 6 points. That's not fair sometimes. This will be a bar to put the market into sideways for a couple more bars, right? Nobody's eagerly going to buy 34. Nobody's eagerly going to sell 34. So it puts the market into sideways a little bit before the bulls decide on continuation, or before the bears can break 26, get a pullback, and then go down. We're still stuck at the moving average. Even this close is probably going to be above the moving average. And so the bulls are holding onto the pattern that since bar 21, every close of every bar has been above the moving average, right? So there's not much selling below 34. Bulls are buying to get out break even around 27.50, probably around the open. And then if we go sideways for a couple of bars, we can then decide if we're going to continue further up, which is likely still, form a wedge on the 50-minute chart. So that would be, where do we have it? That would be leg 1, leg 2, leg 3, right? Leg 1, leg 2, leg 3. You can see that this is leg 1, pullback, leg 2, pullback. Can we get a leg 3? All right, so it looks like we have other members of the team ready to take over. Brad apparently is still offline, but stay in the room as I need to really jump out. I'm not going to miss this trip. And then we have some members of the team. They're discussing it in the offline here, who's going to take over. So stay in the room. We'll see if somebody steps in, or Brad is going to come back. Right now, I think, well, all of the gaps are closed, right? So gap closing festival has been completed. Looking at the hourly, neutral. Looking at the 50-minute chart, neutral. Looking at the 5-minute chart, it's fairly neutral as well. So I can't promise you a bullish breakout, but I'm looking at the 26 low to find either a bearish breakout or a bullish breakout. Right? 26 low break would take us to a new low of the day. Continuation on the 34 and elimination of the bearishness of 34 would possibly bring us to a new high into the 53.30 area. But I think the market is quite neutral at this point. They're in the middle of the daily range. So it's not bullish, it's not bearish. You're right at the middle. It's where the neutral price is. And so either wait and find a short at the highs or find a long at the lows. Possibly and likely this day is going to stay a trading range day all day long. And with that, I am going to sign off. I'm looking forward to see the people in Orlando that are there. The ones that are not there, I'll miss you guys, and I'll be seeing and talking to you soon here in the trading room. Take care, everyone. Hope you have a great day. Thank you very much. Bye-bye.
Okay, good afternoon, everyone. This is Rose. Today is Tuesday, May 28th, 45 minutes after 12 noon Eastern Time. All right, let's start. All right, so I had kind of an expanding triangle here, and we kind of broke this, but really the buyers showed up in the first break of the trend line. You can also just draw your trend line this way, and you can see that's 1, 2, 3 and we're bouncing. So the market is still trying to get back to these highs. There's a gap here. Who's trying to close this gap I don't think we need this. This morning I was more bearish than bullish. I had a head and shoulders pattern. I wanted market to come down to here, but bears failed. So the area of interest, I look for 2 tests before I buy. There was a very strong breakout here with this bar, and the market came back down and bought again. So now bears actually closed this bullish gap here, but they bought it anyway, except that it's not all that strong and market could start to swing. So be prepared. Although it looks like it's trying to go up and test this lower high, and that we might very well do so. In the process, if we actually end up closing bull bars here and keep buying, we could easily reach up to these levels, even right there. Okay, so but first we have to test this area, and if we fail to do that, and if we fail to get above this green, and it's a key level on Globex range. If we fail to get above the Asia high or these levels, then we're going to start to come back down again. Okay, so what the bulls see is kind of a lopsided inverse head and shoulders pattern, but this is lower than that one, and that makes me nervous. And this gap is closed, so I don't know how strong the bulls are, to be honest with you. There is quite a bit of bear pressure here. This is the gap that the bulls are trying to close. Okay, they might have a go, but if they fail around here, we're going to come back down again. This is the area I would prefer to buy. But I need to see bears actually this time around break this area. So right now, they are trying to get above and stay above this trend line, which they did, but we need consecutive bull bars closing on their highs and taking out this price line with bull closes in order to test inside this bear gap and have an attempt to close it. Without doing any of that, market can come back down again. So it's very difficult today, but I sold in the morning. I said that I see a bear flag, and I sold underneath this bar, and I had 3 targets. We made quite a bit, all of them, except actually we made all of my targets. There was one target which was 1425. I said maybe we can extend to that. We didn't. So I had 3 targets and we met them, and I exit and I started to buy that reversal, but I didn't like any of these bullish legs, right? You got a leg 1, pull back, leg 2, pull back, leg 3, 1, 2, 3, wedge top, lower high, and the market could sell again. So this isn't really all that great for bulls, although they are still trying to get up here. It's just not all that great. So I ended up taking profits while I was just showing my face with food earlier, and I just wanted to get ready for the stream. Okay, let's see. Hello everybody. Okay, and this is the Globex chart, obviously. All right, if bears break this trend line, this is support right here. We might come down and test 2150, and if we start to pull underneath that, we can come down even further. Now I have yesterday's half-day price action plotted on my charts. You don't need to pay attention to that. So therefore, Friday's low is right down here, right? And there's a gap there. Friday's high is right here, which we have tested, but we did not break above. Bulls seem to want to break above that, so I'm going to draw that line just in case. Okay, so here we go. So that is Friday's, that's Friday's high. So I'm going to draw that line just in case. Okay, so here we go. So that is Friday's, that's Friday's high. Okay. And Friday's low. And the closes is right here. Okay. Which is same as the open of the week. Get rid of that. We're in a wedge formation. It's not a good trend, but it is going up. There's a bit of a gap here, so the market wants to close that gap. It's resistance here. So if we can break above this, we're going to have an attempt to close this gap. But again, that's gap from a price action that many traders don't respect. Bulls need to close above open of day to become a lot more bullish. It says bears trying for the second time is sell in this area. This is the resistance right here. First one was bar 34. Okay. They're trying to sell signal bar is weak, bar 40. So, and it didn't get a follow through 41. So I don't know if this second attempt fails, we're actually gonna go and test above bar 1. But some say no, this was the first attempt. That is the second attempt. Therefore, we're going to squeeze out of this. Okay, that's fine. But the problem with the squeeze is that if you buy the squeeze, it's going to go up. As you buy it, it's going to come back down. You're going to lose a lot of money. It's going to make you nervous. Okay, and then as you exit out with a loss, then bulls actually start to show up, if that happens. Otherwise, bears are trying to close below this, and they see this as the actual sell, or you can say, I like to tighten it up. So that means we didn't touch there. So that's the first sell. That's why I said 34 would be the first. And then the second one is bar 40, but bad follow through. So bears are trying to compensate with 42. They need to now break that trend line and break the Globex low, close this, close all the way to the low of area of interest, which is a tight trading range. Coming from here, it's a magnet, but if we suddenly somehow get bull bars, all the bears selling will be trapped. My only problem for bulls here, this right here is lower than that. It should not have happened. That should have been either on the same level. Bear bars should not have closed below this low, but they did. So this tells me inverse head and shoulders could be false, right? And market may not go up. So that means you have complex left shoulder, complex right shoulder, and a lower high, and the market wants to come down. So what do we need? Bears actually need to close below the Globex low. Take out this area. We can find ourselves in this area. That's where I would look to buy. But this is the swing trade for bears right here. They entered underneath 41, not a good sell bar, but they entered anyway. And they didn't really get a good price. I guess they did. If they have entered below this, that's a little bit higher, but it's not a good bar, but still it's a good entry. Okay entry, I should say. So now bears need to step it up and close a bear bar. Commence the selling. First scalp target is going to be between 21.25 to 20.25, possibly, for bears. So bears trying to get a 10 point out of here. They're counting, okay, and that 10 point that's 9. That's the earliest scalp. Could go and test the 10 point right there, okay. But they need to close a bear bar here. Not just here, below 23.25. They do that, they will accelerate the selling. So we need a bear body closing below 23.25. Then the selling will accelerate. And the first target could be 20.25. Could go down to, I guess, 19.25. That is 19, I think. Where does it fail? It could fail around 21.25. All right, so the bears fail to close a bear bar is below the level I called, which was 23.25. But bar 42 is a really nice bar, except that you are in a trading range, within a bigger trading range. So bears failed there. So that's a problem. But we have a break of this trend line once again, and now a retest. If they show up, they show up. If they don't show up, this is done. And the bulls will try to bring market back up here again. So they have to close this bar as bearish as possible and below 23.25 to sell more. Any failure is no good. There are probably buyers, believe it or not, waiting above bar 42. Even though it's a strong bear bar, they're waiting there. Because they saw the failure with the close of 42. It didn't close where it's supposed to close. Came close though, so it's not all that big of a failure. But they're saying if the bulls actually show up, they're going to try to get in one tick above bar 42. But if this bar closes bearish, we're going to accelerate down very quickly. Oh, that's it. Okay, here we go. Whew. Wow. Okay. That's beautiful. They just literally reached the target. This is the news, by the way. What's going on here? Hold on, guys. I got partially filled there. Some kind of a bill auction just took place. So that accelerated the price. Now, I like to see bears actually sell this. We came so close to the 10 point, but we didn't really tag it. So if they can actually go and tag it, that would be great. Maybe even get a follow through. If bears can actually break these last week's mid-range, 53.1575 or 53.16 area, we could continue to sell into here, lower third of last week's range. So around 53.01 to 5300 becomes magnet once again. So I would say market could reach, but first I'm selling into 53.15, and I know we're going to bounce there a little bit, but if this gets out of hand and the bears continue to want to sell this, I'm going to look for buyers around here. 5300 is down here. I'm more interested in, okay, so I got another scalp there. I got my 10 point, but I want more out of this now. So I want to see bears close a strong bear bar below 11 point, somewhere maybe here. Okay, if they can actually close around there, either this bar or the next bar, we're going to continue to come down. 53.15 area would be my target. But it's a trading range trading. Okay, so it's tough. But if it closes on its low, it's going to get a follow through. So your follow-through target will be 53.15, and then furthermore down, 53.13, 53 maybe 10. I'm more interested in 53.15, 53.15 and a quarter before the bounce. Trading range, so always buyers here, but I like to see market actually come into this area and look for buyers. That would be much better setup for us. So maybe I'll mark that, and somewhere in between. It's a pretty wide area. Not that I like this, such a wide area, but it is what it is. So market could continue to sell into this area, and it will look for buyers here. Like to see bears get a follow through here rather than bouncing, but even if it bounces up, probably will want to sell more. So is scalp targets for bears starting around 16.25 and goes all the way to 14.25, 2-point area. It's bouncing because the bears are taking profits, but it's a breakout and pullback. So you have a breakout bar, pretty strong, right? It's an ATR bar. It's pulling back about 33%, maybe up to 50%. Sellers are there. Only time that you give up on the sellers, if they take out the 66% of it and start to close bull bars, expect these highs to be tested. We might even go right back up. So it's dangerous. It gets dangerous. I don't measure the wicks. I measure that. We're already at the 50%. Okay, so let's see if there are any sellers here. That's an ATR bar, right? So I'm looking for, see, we're just about to test the 66%. You don't want to see bulls actually close above it. If we do, we're going to go right back up. We could even reach back to these levels again because it's a trading range. So it's trying to reverse back up. But anybody who was still selling, stock now. So they're looking for a place to sell. They might have already sold these pullbacks, right? And might even here. So any reversal, they're going to make money. And then we can exit out. Or they can exit out. So the bears now need to do everything in their power to close this bar as low as possible. If they can do that, that's great. If they fail, then this is it. That's a failure. Breakout, lower thirds of the trading range, buyers showed up. Can we go all the way back up? Yeah, open of the day. We could just go right back up to open of the day. So I'm kind of bummed out because I was really holding a runner into 53.15 and a quarter area. It went against me. I didn't sell this bar. I was getting ready to sell. I wanted to see if the sellers were there, but if they just cut through it like a hot knife through butter. So I'm going to wait and I'm going to sell in the resistance instead, which is right here. This is the resistance. Just waiting for bar to close. But it doesn't look good for the bears. No one is selling all that strong, but they are still selling. So this is still resistance, and it will sell from the low of bar 42 to the high of 43. I already sold. Now I sold, but I'm looking for break even for that runner. But it's difficult because of this bar 44. I scalped a lot with 43, but I kept the runner just in case we continue to come down to where I wanted to bounce and where I wanted to exit and then buy again, which was 53.50. I didn't get it is because the bears could not close beyond the 11 point. So therefore, there will be no continuation. And I know that many bears are stuck, so they will try to fix it. Now, this could go higher before any sellers would enter, and that could be around 26.75 to 27.75 area if bulls can't, if there are no sellers here. But it is a sell zone, so it'll probably going to try to sell. You have an inside bar, very strong, 44. So bulls trying to reverse this back up from the really nice area. But when you're stuck, right? So if you are bear, maybe you sold the close, you sell, maybe you sold the close of also the 44. You're desperate the market to come down to somewhere in the midpoint. Okay, so Brad Wolf is not going to be able to join the rest of the afternoon because he cannot get his power back. Quite a strong storm passed with people actually died in Texas, Houston area. I think it's affecting pretty much that entire area in the north. So hopefully he can actually get out of the state because those boys need to travel to Orlando. So hopefully his flights are not going to be canceled or postponed. So it's still the reason why we are stalling here is that bulls trying to absorb all of those sell orders here because it is still resistance. And there are a ton of people are stuck here. So they want to bring market down to 21.50, 21.25 area. And so there's a block of orders here still bulls are hitting. What they're trying to do is they're trying to break it so they can go 10-point target and get it. So the 10-point scalp starts around 26.75, goes up to 27.75. Other bulls, they want to bring market up to 53.31 and then furthermore up to 53.35. But we got to let the bears exit out safely before we continue to go up because it's not fair to them. They sold underneath this bar and it was a good sell. Okay, you got a wedge top and a double top and a lower high and a second sell. And they were making money, so it's not fair to them. And not a good buy signal bar, tiny little body is with a huge wick. So they know the bulls are going to be terrified buying this bar. So they're selling to get somewhere in the middle, okay, to get a break even. But that doesn't mean that they're going to break even. They can actually continue to sell and reject and come all the way to the lower third of bar 44. I'm not sure if we're going to come all the way down here. I would say and I'm one of those bears, I sold here, I've yet to break even, so I need market to come down a little bit more. I sold more than a one contract, the equal size of the contract I was holding. I sold actually 2 times more, so I'm going to get a much better break even price, but I still haven't. It keeps hitting, but I'm practicing greed here. So I just want to make a little bit of money with this. I'm going to wait for 21.25, I think, is there. Wait, did they hit? No. Either 21.25 or 21.50 is their break even. So I'm going to be making money here, hopefully. But I can just hit close and I already break even here. I just don't need to linger. But all that pain that they cause me, I want to get something out of it. And I'm getting something out of it. All right, excellent. I just got filled. I actually ended up making money. Right? So they did sell. Now here, if you are a bear, you sold the close of 43. You sold the close again because it's 2 bar, so its trading range is, maybe you didn't sell above it, but you sold the close of 44. This is your break even. So this is where they're trying to get to. It went up a little bit, so you can say, all right, maybe I should measure from where they actually sold, which was the close of 45. Now you tell me, look how close they've gotten to the break even. It might even be the break even. 51.50. Yeah, 51.50. They just actually tagged it. So you can see how that worked out. Would have been better if it was 51.25, but who cares at this point? Because this now is a pullback, low one, and they can actually trap those sellers, and it could go up for a second leg. And bulls are like, okay, we give you your chance to exit out, and we're going to try to close this bar as high as possible, and then we're going to get a second leg out of this. It could happen. I don't know where this bar is going to close. There's still 1 minute and 23 seconds for bears. Wow. So no damage at all, Ted? Nothing? That's good. I have some friends in Dallas, Texas. How far is Dallas from Houston? Oh, I see. It's not that close. All right, so the bar expectedly closed on its high, which we kind of knew that could happen. So now bulls want a second entry long. That means they want market to go above 46. It's probably buyers above 46. But it is the second sell, right? First sell, bad signal. Second sell. Bears still want to bring market down, but this is very difficult now. They're still selling from the resistance. I like to see a failure of taking out the 46 low and the market to get going to the upside again. So I have a buy order is above 46 waiting. Bears got their 2025. Okay. But now, hopefully they cannot close a bear bar, because if they do close a bear bar, they're going to try to bring market down to the lower third of 44. But they came down and tested the 21.25, which was their break even. Now, if they can actually satisfy and get out, then we can move up perhaps. So a bunch of buy orders now above, possibly above 46. Also, many also entered above the inside bar 44, and they're stuck. So they're not very happy with this arrangement. They're buying at the 50% of the strong bull bar, and they're trying to break even now. So they need to get market back to one tick above 44 to get a break even. You get an outside bar followed by an inside bar 43-44 combo. Upper thirds, we have bears showed up. They're trying to test the lower third of bar 43 or 44. And they want to eventually go and test the 43 low and break out from there, but not when you have a bar like 44. That's going to be difficult. So the mid-range of 43 plays a major role here, whether it's the mid-range of 43 or the inside bar 44. If that area holds, we're going to go and test the 43 highs again, okay? And 44 highs where bulls already bought and stuck. So they're utilizing this midpoint of this outside bar, inside bar combo and they want to keep the markets above that midpoint, and they want to get a bull bar closing above 44 high, go and test the 43 high. Now, can bulls get a breakout from the 43 high? Yes, they can, but they have to close a bull body above 43 high. So then 41 lows and the 39 lows are probably target. So if all of that happens, is market will push up. But first, we need to see bulls actually get a break even above 44. Here's the bear trend line. Bulls need to break that as well. Bears are still pushing towards the lower third, but there are limit order buyers waiting there. And from here to there, we could test and then trap and go. But if you really want to see, right? So this is the outside bar. Measure it. Just to see the boundaries and where we are. The lay of the land, I call it. Where are we really? Because it's kind of important. So let me get rid of this. You kind of got the idea. This area is buy zone. Starting from here, especially here, is earliest. We could just test and bounce, but we could also come down all the way down to here. But eventually, bulls will try to trap those bears selling. If they fail to trap, we come in, we bounce, and then we go down. So we're about to enter into the limit buy zone. If there are any buyers there, they'll start to buy there. Bears, on the other hand, they're trying to get back to the 43 close. But if it fails, then we go up. That's basically a two-legged move down after this big bull bar. Two-legged move down. If this is good enough and we can trap those bears somewhere here, I would like it at this point come down and test it and then bounce. Then we could bounce. But what if we don't close a bear bar below the midpoint of bar 43? That's fine. Market could push up all the way to here. First in the middle, and then there. But I need bull bars now, closing. There's a two-legged move down. It's also a bull flag, believe it or not. Right? So what do we need? We need bull bars to take out these highs and get up to the 44. Then go up there. We go there, they're going to try to sell. We fail, we take a bull bar, bull close, then they will buy the pullback and we can go higher. So I'm not selling this, that's what I'm trying to say. I've already got my break even and then some, and I just exited out of the market. I want to see if we can actually trap these bears. If we cannot trap it, I'll sell into this green zone. I think I am wrong with this. This should be 16. Yeah, that's more like it. We break the last week's mid-range. Market could sell into 53.0150 even. Right there. But I need to see how strong the bears are here. They're already, remember I said they could start to swing this down, and that's what they're trying to do right now. But they're not getting a good traction. They need consecutive bear bars closing is on their lows. You get a bear bar and a bull bar and a bear bar, another bull bar, now another bear bar, testing the midpoint of that doji on the 15-minute chart. And there could be buyers there trying to stop the bears. But if the bears do close a bear bar towards the low of that doji, 15-minute doji, bull doji bar, then that's it. Bulls will, it is possible that they could give up. because it wasn't a good buy signal bar to begin with. And I did say that if we cannot get above here, this could be a failure of any reversal up, and we could swing down, and that would give us actually a wedge bottom. We could end up testing right here, right? Possibly even, so one or the other, we could test those. You see what's going on here? We just tested the buy zone. Buy orders are laced in this area everywhere, all the way to down here. So what happens is we tap in, it goes up, everybody starts to make money. It's not necessarily a swing long, but it's basically buy the pullback, and as it goes up, scalp some, and then hold a runner and see if it can get above 45 high. So it goes into the area, and then some of those buy orders are activated. Those bulls are making money, but it's not all that strong. So we need a bull bar closing above the dash line, which is the midpoint of 43. We get that, then what you need to look for is a bull bar closing around here, especially above this upper red line. Then you're going to target the high of 43. This is inside the range trading, buy low, sell high, until you get a breakout. So without getting that directional breakout, it's just a back and forth trading. There's sellers waiting above, there are buyers waiting below. In between, they scalp, hold some, and then look at the conditions. If they get a breakout from the 43 high with a bull close, hey, that's great. We can go even higher. Another way of trading today, I'm going to delete all of this. Okay, you can just you can have this, all of this on your chart, but oh wait a minute, I don't want to delete that one. I don't like that one. Oh, that's the one I'm trying to like. Okay, so everything. All right. See, this trading range trading is you can simply measure your trading range, the entire range. When you decide, okay, this is definitely a trading range today, then divide it into 3 sections. Right. Buy in this area. This is a sell zone. This right here is a sell zone, and the market has proven to you they sold in the middle part of the sell zone, sold again. They bought here, the buy zone, bought in the middle part, bought again. This bar closes really bullish. We're going to go and test this, and then test possibly there. Okay. If the bears cannot sell, bulls will take profits, but there are no sellers. We can come down here and then bounce and break out. It is possible, but right now you're in this trading range. So what I do is, okay, so yeah, so I get my trading range high and a low. You want to be a buyer in this area. You can scalp a little, hold a runner. These boundary lines, these are 3 trading ranges stacked. So I call them these boundary lines, okay, are important areas to take profit. And for extension profit taken, I use the midlines of each stacked trading range, each quarter, or yeah, it's not really the quarter, but I guess it is 3/4. 1/3, not quarters. So there will be some profit taken here. We're just about to test that. Mid-range, midline, or midpoint. There will be profit taken, but we can shoot up. My target is the boundary line right there, but there will be some machines will take profit there. It will be better if we can go higher. It's a second entry long above bar 48. Now this is bar 48, 49, so we're at a time for a swing setup. So what does that mean? Well, we're still below the EMA, But we got a really nice second entry higher low here with bar 49. And it's an engulfing bar. It's a really beautiful close. Yeah, it's middle of nowhere. It's middle of everything. So you can go up, you can go down. They're taking profit here, like I said, but I think the bulls want to get up to here, maybe in this area. Because it is a trading range trading, open of the day becomes a magnet now. Okay, we can even go and test open of the day. So what do you do here? I said I'm not selling, I'm going to buy. I was a little bit late entering too long here. I should have bought with limit orders, but I didn't. But I did prove my point with the mother bar or outside inside bar combo. I did say that there are buyers there, so you could have bought and then scalp right there and then hold some, see if we can actually keep this gap open here and then go higher. So bar 49 gapped up and created that little gap there. More that gap stays open, more bulls will join. So how this bar closes is important for two reasons. First, are we going to keep a small gap here? And the second, will this bar close above that midline and bullish enough to get us up here very quickly, if not further higher? Mondays are slow, but there's always some kind of a trade available, right? If you structure it right. I am long now. I entered one tick above 49. I'm eyeing that boundary line, slightly closer to the open of 41. We're going to test the 43 high, might go up a little bit to 26.50, 26.5. There might be some sellers waiting there because you got two bear bars. So at the high or the upper third of 42, probably sellers waiting. But the bulls want to go and reach 27.25 at the minimum, I think. So they need to close a bull bar here. I'm going to scalp. If I go with this methodology right here or method, I'm going to take profit right here at the boundary line, which is exactly where my outside inside bar combo is the highest trap zone, which is 26.50. Yeah, 26.50 is two ticks above of the boundary line. So either here or two tick above, we could test before coming back down again, or we're never going to come down. We could just close above it, retest it, and then continue to go into open of the day. So you got a really nice possible trap here under the EMA, but we also have a bear gap, just like we have a slightly bull gap here. From the low of 41 to the high of 43, that gap is still open for bears. So we're stuck in between this area, okay? Bulls did close a bull bar here. That right there is a good sign for them. So what they want is they want to get back up there and they want to close more bull bars, okay? To turn market into even more bullish. If they start to get buy to close bull bars, what market will do is they come down here and then get a swing up. So the goal is to get to 33 high for them. If they fail, we can make new lows. But the one thing that is not working out for bears to make new lows, that we never took out that low. This is an inner, like, yes, we took that out, but what good is that do or make if we cannot take out that low with a bear body, right? But it also similar situation for bulls too. They really didn't take out that one. So whomever takes, if the bulls first take out that high, they become bullish. If the bears take out that low, market becomes more bearish. So you're smack in the middle of a triangle. So what does that mean? I said so many things. That means you're in a scalp mode. That means whatever you can get your hands on, you're going to take it. You're not going to linger in the market long. You're going to take it. That's why you're going to utilize these midpoints and the boundary lines until you get a good reading. So what's happening there is 2 consecutive bull bars, but only one of them closed above the midpoint. I did say that they would take profit, and they were taking profit. I entered above it, but I didn't really make any money there. So my entry was 24. I didn't even look. That's only 3 ticks. There's not even a 1 point there. That means it needed to go 5 ticks above where I entered. It didn't, so I'm in red at the moment, barely, but it's like $37.50. But still, red is red, right? And it could go even more if we close below this boundary line. We need a bull bar closing is above the close of bar 50. This is a swing setup, but it really didn't set up all that well. Around 1:30, okay, p.m. is around bar 48. It sets up, right? So, but we need a pullback and buy. So, is this gap closed? No, not yet. Bears need to close, overlap with 48 body. I am missing my bar timer. Okay. We're still above the midpoint of 43, bar 43 range. It needs to close a bear bar below that to become more bearish. And then it has to come down and close below 1925 to become a lot more bearish. Then I will expect bears to take out the 43 low and then try to get a breakout from there. But if they fail, this bar or the next bar, bulls can still show up. But you understood, right, why I scalped here and then I jumped in again. Okay, I said this is good. I'm gonna expect this to be right there, but I just didn't get anything. So I'm actually losing money now even more. I'm gonna have to either fix it. I'm just gonna wait for this bar to close first. Either fix it, exit, and join the bears, but I don't like to switch sides very often, very frequently. I need bears to show me that they have the power. That means they need to close below that midpoint of bar 43, and that is 21 and a half. If they close a bear bar below 21 and a half, I will exit out of this long. It's a really bad day today. So basically what you have here is, let's see, come from here. See this? We went up, we came back down. We went up again. See this line? That a dash. If we close below it, it's going to become bearish. Again, buyers showed up at the low of the trading range, but if this bar closes below this is diagonal, what it is that it acted as a attractor, sold, went above it, tried to stay above it, but failed to take out that high, so bulls are trapped. It comes down and wants to take out these lows, where the bears got trapped. So market is just doing a two-sided trading, but if we move underneath this with a bear bar, market can become more bearish. So what happens is if we close this bar like this, we go back up and retest, and then we could continue to sell. So I look for these kind of where is the price action testing, right? Where is that common price that market seems to like to go? And then if I'm above it, I look for a retest and I buy a good buy signal bar like 32, like 37 is, right? So this is not good because it actually opened all the way under. So because the bears actually closed. When I see something like this, I know there are sellers up here. They're going to try to sell and bring the market back down to that line. That's exactly what happened there. They couldn't really close 2 consecutive bars. Bulls took over. That's why I bought it, thinking this is a really good buy signal bar, but I got stuck there. So now I see it's going back to it again. It could close. So I exit out of the short long because I don't want to be stuck in it, right? Especially if it closes now, is very bearish because we can then come into this area. So in trading ranges, days like this, I find these areas and I pay extra attention. I look for double tops, double bottoms, right? I look for a double top near that line, double bottom near that line, and good buy signal bar, right? Look, they sold that double top and a good sell signal bar. Now, it's not all that great, but it closed below and it closed on its low. Anybody who sold below, that was a reasonable thing to do, right? And maybe they said this is the first sell, it's the second sell, and they completely got trapped there. So what do you think they're going to do? They're going to wait for a market to get up there, and they're going to sell, and somewhere in the middle, right around that line, they're going to exit before it goes back up. Look, that right there is a beautiful break even. So now bears trying to close a bear bar here. We could bounce up because you're at the low, but I think the market is trying to take out the 7 low, which is mid last week's range. If the bears close, we can extend all the way down to here, somewhere in the middle or somewhere down here. So be prepared. It's a really nice bar close, but every time we close below this line, look what the bulls do. So they want to get back up because they're stuck up here. So if you're a bull and you bought there like I did, and then you exited, or maybe you held it, right? This is a low. Maybe somewhere at a magnet right here you bought. You want desperately market to get up here. But I don't know. We had a much better buy zone here. I would not do that. And because I've seen this day many, many times play like this, I exited with this bar before it's coming down to my stop. So I now sold it underneath that bar, and now I'm making money. So this is great. Excellent day. All right. All right. So it worked out. And then what I do is another way is, okay, so I look for about like 4 touches to this bar, but I don't like this much price action. I want those touches to be close to one another, like maybe 1, 2, 3, and 4, right? Okay, that was a good sell for me. I actually did sell that, and then this happened, and I got very upset. So now above the EMA, I'm looking for, not EMA, this moving, this trend line I'm looking to sell. So where am I going to sell? I'm going to sell a little bit up with the first sell signal bar I see. I sold it, I broke even. Now I'm looking for touches, right? Here's market moved above. Here's 1, 2, 3, 4. Good buy signal bar. I buy above it, and I have a really nice scalp. Either these highs, those highs. Although we didn't get to that high, but I scalped. So that was good. And then this happened. All right. So this is nightmare. Market is definitely in a trading range, and paying attention to this line I know it's going to come back down here. I'm looking for here. We went above it. That's 1, 2. That maybe touched it. Maybe 3, 4. Good buy signal bar. So I put a buy stop order. Nothing's happening. I move it above it. Nothing's happening. I move it above it. Bam. I'm in the trade, right? It kept holding. Look. It went up, gapped up, came back down. You can even say 1, 2, 3, 4. good buy signal bar. I'm buying above it. I bought it and I made money. You take profit somewhere towards the highs. Is if they exit out, then you know where it's going to go. It's going to go right back, snap back to that line again. Now this time we moved under it. I'm looking for 4 touches, but it's under, above. Now we're above. I count for the bulls. Maybe 1, 2, 3. Good buy signal bar. Now you get my drift here. Why I'm buying this? Why I bought bar 49 and it didn't go my way. What do you think I'm going to do? I mean, look how many times they bought above such a great inside bar, didn't go anywhere. Do you think it's going to go? They're already proving to me it's not going to go, right? So now they move underneath. I'm not going to take the chance. This is coming down. I'm out, right? So took a loss there, and then I sold. Really nice close. I said I'm going to sell this because I think we're going to come in here. And we did. So I took profit there. And I'm flat again. So it's a bit of, so what am I really looking for when I'm doing that, right? Remember I said, you know, my ATR is 4. I always look back 4 bars to see what market is doing. Basically, I'm using trend lines. It's almost like a dueling trend lines, the L's dueling trend lines. You got trend line there, right? You got, let's see, trend line here. Right, so it's basically those dueling trend lines, except that I get very confused with too many lines on the chart. In a day like this, I find a common area where price likes to go after gapping down. That means it's not getting a follow-through sell. That means something this strong is not getting a follow-through sell. It's going to snap back somewhere. That's right there. I didn't have this information until all the way to here with the price action. Okay, is somewhere here I started to look. I just needed to like 3 touches, like somewhere around here I started to look. Okay, I can buy now. This is a common attractor bar, and I'm gonna mark it as paying attention to it. I'm gonna see if I can buy the pullbacks. As long as it stays above it, I can sell, so on and so. But you don't have to trade this way. You can simply count legs as well. Strong sell. I had actually this morning 3 bar measured move target, which was right there. We got that right there. We scalped that, and the market continued to go down. So you can actually remeasure it if you like. It came down to the 1.5 in between with bar 7, and it couldn't close a bear bar. So that's it. You're done. So what I do then is I actually measure the bar that actually trapped the bears. That was bar 7, right? But it's where are the buyers? All the way to here maybe. Some buyers showed up, but nothing's really happening. So really right there. So this is where I was shooting for. I couldn't get it. I got the half, and it came down too strong. I was holding a runner. I said I'm going to keep holding that runner, but I have to add back here. I saw bar 19 failing to getting a follow through, because if you extend this all the way, is either that way or that way, it doesn't matter. So we never close below that 50%. And then you get a bull bar that's failed follow through. They're buyers at the lower third of 15. Those limit buyers are entering because they couldn't get their 1R. So they're buying, breaking even, holding some. Look, we got as close as possible to 1R. However you measure, you can also measure from here, then you got your 1R. If you exclude the upper wick of bar 7, which was the trap bar, right? Bulls trapped the bears. And they came very close to 1R, came back down. They bought again. That's right there, 1R. But they're not able to get above 1R with consecutive bars, closes. So that means market is reversing. So I'm looking for a reversal bar. There's one right here. You can put your stop there, and this is how I would measure. So I'm looking for half R, and I want to see bears actually close beyond the half R. That right there is half R. I scalp there, and it just keeps coming down, right? And it fails. is where are the bear closes? So it goes back right up, right? So what do? Would you wait? Would you exit out of your short? Would you buy? Well, if I stick to my rules, right? So that is the bar that trapped the bears. Sorry. So I'm looking for a 1R. I can buy. That's 1R right there. Nothing closed above it. So we're not going to go further up. So do I see a trap there? Yes. Look at bar 40. 40 trap above 39. Everybody trying to look for a 2R target there. So what do? You can do the same thing. The rules are the same. You put your stop there. That's how I do it. I exclude the wick and the sellers right there. That's my 1R. That's my 2R. Heck, they even got a 3R target. Pull back and they're even selling more, but that's not where I would not use this measure because there's a lot of price action happen here for bulls. So you can also trade with that. So basically what I'm looking for is that half R for confirmation to go into 1R. I take profit. If they continue, that's great, but suddenly I see the side that I'm trading with gets trapped. I immediately measure for the other sides, and other sides generally waits for the opposite side to go and take profit at the 1R before selling and fixing if they're still in the trade. So you can use that as well. So it's just back and forth trading like that. You can still make decent amount of points and exit out of the market. You just have to pay extra attention to the bars. All right, so what about the bulls here? Do we have any buyers here? Inside bar needs to close above, as high as possible with a very little small upper wick. If they fail, I don't know, I probably wouldn't buy above that bar, inside bar 54. But look what happened here. I said we're probably going to tag one of these. Actually tag both of them. So we do have a wedge here and a wedge there. What do we need? We need a good buy signal bar. We have now double bottom here. We're in the buy zone. I need a good buy signal bar. You got a spike pullback and a possible channel down with a couple more legs. I am not buying this, but the traders who are looking for a backdoor to enter to go long, they already parked their buy stop order above the inside bar 54. So when the 55 closes, they're going to drop that right on top of it. Okay, so, but you're buying against a very strong 3 bear bar tight bear channel. Probably the first pullback is going to be minor. We could come back and retest before buying again. So basically, this is your trading range still. Okay, bar 54 is not a good buy signal bar. It's a doji. 2 dojis would be better inside, but still, we need to close a good bull bar, right? There are some buy orders waiting above because it's trailed down, but I don't know how far you're going to go. From here to there is resistance. We could go there, test twice, and then sell again. So I don't think I'm going to buy anything here yet. I want a much better setup than this. Because as far as I'm concerned, this can sell. But you're in a trading range. Bear flags can fail. Okay, market. So I'm looking for 2 tries, 2 little tries, maybe like a micro wedge, and then go up. So I'm just going to wait patiently. I'm not in a rush to buy anything. They have to do better than 54. So now you have a new inside bar and a new outside bar and a new inside bar. You have even II if bar 55 does not take out the 54 low. It looks like it wants to take it out. Can the limit buyers show up underneath bar 54? Yes. If that's the case, I love this kind of setup, by the way. So it's like a goalie post, right? If you're familiar with American football, right? And, you want to see buyers here, like right underneath. And then the bar actually closes, right, on its high. If it closes bullish, everyone will buy to close. But if it doesn't, I'm just not going to do anything. So I wait for the confirmation. The first confirmation is, or the signal is, we have test below the 54, buyers immediately start to show up. Now those buyers need to show me how strong they are. That means I need this bar 55 to fail to take out the 54 low and close a bull bar last minute. So we have 1 minute and 50 seconds for this bar to close. Let me add my timer here. Give me a second. If that bar closes and it's trying to close bullish, I'm going to buy that. Buy to close, I mean. Bar timer. So the setup is waiting for the bar to close bullish. In the meantime, limit order buyers are here. Stop order buyers are above 54. They're waiting to get filled. If they get filled, we could suddenly turn into limit order buyers are making money. Stop order buyers are making money. If this bar closes with a bull bar like that, market order bulls will jump in, buy to close, buy market. That could bring us into the resistance fast, which is right into that. We can even break that. Oh, look, see, they're buying now. So the backdoor bulls entered. They found the backdoor above 54, but it's not a good one, and you're buying into resistance. So they're going to scalp a little, maybe a point or two. Where is my ATR? Wow, something happened to my chart. Most important things I'm missing, timer and my ATR. Okay, ATR is 450, so that means they're going to try to get a 225. Half the ATR is 450. I can't do the math today. Yeah, it's 225. So from one tick above 54, they're probably going to go for a 2 point. They have to make 225 to make 2 point. That's why this bar is pushing. All right, they did buy. So did I, but I scalped very quickly. I just wanted to see. I wanted to see a confirmation. This is good, but the problem here is could be a minor pullback. You're still in the resistance and you're buying against a tight bear channel. So you do have a wedge here. Okay. So what do you need? So we need actually is market to come down to the 50% of 53 and bulls to hold the bears there and give us another, give us a higher low. Maybe this is higher low. I don't know, but give us another bull entry. So I took profit in there. It only gave me 5 ticks. You can go for a 2 point because of the ATR, but the ATR came down quickly and you're in the resistance. So if you actually count 1 tick above this bar, there's a 5 tick scalp there. I took that because I'm buying into this resistance. I don't know if market is going to breach that. It could very well just come down somewhere in the middle here, and I don't want to give back. But others are looking for 2 point. What about swing bulls? Can this swing? Well, they had a chance here and they gave up. So now the bears are actually swinging this down. It's been 1, 2, 3, 4, 5, 6 bars. It could extend all the way down 12 to 16 bars. Okay, this is why I scalped here. Now, can it sometimes the swing can cut short? That's why I said we're probably going to come down here somewhere. If the bears actually close below it and take out these lows, oh, that's bad. So I don't want to be stuck in there. There was a good trade there. I bought it. Disappointed that resistance is nearby. So bulls need to break this resistance to continue, reverse this up. Where can it go in order for this to reach these highs? Well, there's a bear gap here from the 51 low to 53 high. What do we need? We need at least to go and test the midpoint, okay? And if we start to close above the midpoint bull bars, that means we're going to close this gap. We close this gap, we can find ourselves right up here. So now the bulls are making money. Really nice setup. I like the setup a lot. Like there was a, let me see, this didn't work out because it's a bear bar. You do not buy that, right? What else? Like here is another one underneath 13, but it's a bear bar. You gonna buy that? It's probably gonna come down and test its low. Then you can buy maybe, but you don't have too much space. You don't have anything here. We made a new high instead, and a new high. Okay, so they start to sell here. They sold the 31 close, but couldn't close a bear bar. No follow through. There's no swing there. And we'll go back up. This is bad, right? Sellers here. No one's gonna sell that bar. And then, well, they tried, but they closed the bull bar. So selling this bar and expecting a big swing and taking out those lows is going to be very difficult. And what it does is when you have a reversal, you have a doji before the reversal signal bar, you ain't going too far. You got bar 45 as a doji, and then you got a really weak reversal bar. Bears try to compensate. It's right there screaming. If you sell this setup, you're not going to go too far. Bulls are either waiting at the lower third or the midpoint. We're going to go back and test that bad signal bar and the doji. And that's what we did with 49 and 50. Okay. Another one. But this time it's a second entry shorts. Yes, there's doji. We're kind of in the middle of this trading range. So much better close, a much better setup. They did start to sell. They took out the 49 low. So now you can say, okay, there's a measured new target here. I think this is going to double up the distance, right? So now I'm looking for 43 low taken out. Oh, they did take out. So this is why I sold one tick under. I entered late because I didn't like this doji for bears, but I waited, I sold it, and this was a really good high probability trade for me. I actually loaded up. I think I had like about 8 contracts or so, and I just held it. So bulls are doing great. So they're trying to go and test the midpoint of this gap. But be prepared. There could be sellers there, not too far away. And plus, it's reversal back up, and you're buying against this 3 bars, bear bars with gaps. We might need to come back down again. So what do? You just scalp. And if bar 53 is an outside bar and if bar 54 is an inside bar, why are we coming down? What have we tested here? Because if you're quick, right? So let me get rid of that. And you measure this quickly and get the lay of the land, right? Get the lay of the land. Where are we? Are we in some kind of a trap zone? Are we breaching a trap zone? How many times that trap zone actually sold, right? Look, micro double top at the top of the trap zone, right? So do we have a breakout bull bar? Bar 56 is not a breakout bar. It tried to break out, but it failed. So it came back and look for buyers again. Bulls are trying to get up to here. They could reach there, okay? They could reach that line. That's the first target, or they may not. Okay, they did reach. All right, good for the bulls. So if anybody, I would not have bought this. I would not have bought the close of this bar right there because it's not an actual breakout. Even if it's a breakout, I would look for a pullback and then buy, right? So they bought the pullback. Now they're trying to close a bull breakout bar. That's because they want to now go back up to here, right? So those are the levels. So they reached a shallow target. They're already scalping, and they're quick about it because they don't have a signal bar that closed above the outside bar's high. So this is not a real breakout. So whatever the bulls get their hands on, they're going to scalp. And then suddenly, if it starts to sell, that's because many people think that this is a breakout, but it ain't. Because this is actually a trading range, and above the trading range, any breakout can fail. This one is telling you already, hey, this is not an actual breakout. That body never closed above one tick above 53. So what you're getting here is a false breakout. Most likely they will either take profit there or here, and it's going to reverse back down. So you have prepared for those scenarios. So what I do is when I see something like this, I put a sell order there. If I'm not in a trade, I put a sell order. I wait market to come down. And I did say that this is a minor reversal, even though it's wedge, right? It's a minor reversal. Yes, it's a higher low. It's beautiful, but you're buying against a bear gap and 3 strong bars with really large bodies that close on their lows. Okay, that's therefore it's minor pullback is for bulls. So you expect a pullback. And let's see. Now, what am I looking for? The last bar in this third leg wedge bottom was bar 53. This is right here is what I'm interested. If market comes down here, and it can, I don't know, nobody knows. If it does, I'm going to look to see if I can buy here and the bulls to trap the bears trying to sell. But if bears start to move underneath 1425 with bear bars, they're going to want to test the lows again and possibly break. But so far, so good for bulls. They're trying to get that breakout signal bar with bar 57. But you got a trend bar and a breakout bar, took out the 43 low, got to follow through. You got a leg 1 pullback, leg 2. Low 1 sell, low 2 sell if we take out the 57 low. If the bears take out the 57 low, they can sell and bring it down to here. Okay, that's a low 2 underneath 57, believe it or not. So it can come down. So without that breakout bull bar, I'm not buying. Look what happened to 57. Did it close bullish? Did you get a breakout, bullish breakout above bar 53? No, you didn't. So you're getting now a second entry short, or at least they're trying to, is from under 57. And that can bring market all the way down to here. Plus, is bar 54 is a bad buy signal bar. Yes, it's an inside bar, but it's a bad one, right? We have to actually come down and test it slow to go up. So market tries to come down to that. It'd be nice if we can actually come down and make a double bottom and then go. I would love that setup. Then 57 would become the neckline, and then we would go to neckline. I would take profit there. I would expect a pullback and buy that pullback with more contracts. So what about the bears? Well, if bears bring the market down and close below 1425, that's going to be bad for the bulls, because then those bears will want to take out these lows again, because eventually they were still selling and they're stuck, right? Maybe they sold above it. I don't know. The bar opened here, came down, went back up. They try to sell, but there's nothing to sell. You cannot sell these bars. In order to sell and break even, you need a good signal bear bar close. You either sell the close of it or you sell 1 tick underneath. So if you are a bear and you sold the close, you sell the close of 57 once again, you got to break even. So now bears need to make everybody believe that the market can go to the close of 53, but only if it closes a bear body 1 tick underneath this break even line. If it fails, then the second entry fails, then we could go up again. So that would be leg 1 pullback, leg 2 pullback, leg 3. But that bar hasn't closed, and it has a high chance of closing below that dash blue line, and it can bring it down to 1425 and beyond. So lay of the land, that's my biggest. And once I started to measure things and look at things, where bars are closing, all of these levels are repeating in everything I measure. And that's how I find my direction around, because it's very difficult. I'm trading against very smart, very rich, traders, traders that been in the market. I mean, I'm trading against L. Brooks. You and I, we're all trading against L. Brooks. So let that sink in, right? So think about that. Even though he's our mentor, but we are trading against people like him, even people with millions of dollars of worth, okay, funds. So which they can buy as high as possible or 100 points lower. I mean, these are strong bulls and bears. So you and I are, I'm sorry to say this, but we are bottom feeders, okay? So we need to really do like 10 times more work to see where we can buy and sell or understand where market, may not be going up or down. So then you can go in a trade and make a couple of points and step aside. Yeah. So yeah, I mean, Trader Tom is one of them, obviously. These are very smart traders. So how did I become smart? Well, that's open to debate, but I guess I consider myself smart. I studied the bars. The most important is, if you want to become really good, study the bar sequences, meaning is 2 bars, 3 bars. What happens when something like this happens? Like here. There was a really good trade there, even though I didn't like the inside bar, but it's set up really nice. If you actually bought above this, you scalp, which I did, right? And now is limit orders are entering again, 1425, disappointed bulls, they were still long, bought again, right, at the 1425, and as the bar goes up, they're scalping out probably. But if this bar now, bear bar, closes below that midpoint and then below 1425, those bears will drive the market down to the close of 53 and then further down. So I study all of that before I choose a side, like which side do I want to trade with. You do all of that, you'll do fine. Sorry, that was not a good analogy, but you understood. We're Nemo, basically. If you guys ever watched Find Nemo, we're Nemo, and the sharks are the market makers, and those guys you're trading against. So be on the blind side of that shark, like maybe underneath, above, but behind the eye, so you can't see. Just, trade with the market makers. Anywho, so we did come down and test. We are now testing 1425. If bears actually close, they're going to come down and test the close of 53 and the lows if they can. Okay, is probably at the lower third of 53, buyers are waiting to trap the bears again. But if we get a bear body close 1 tick below, minimum 1 tick below 53 low, bears will get their breakout to the downside. So that means we might actually get, what do we get? So maybe we get this. Somewhere here, we break this and then reverse back up. I'm going to take a quick break. I'll be right back, everybody. Okay. All right, so we're testing the lows again because it's a tight bear channel. First breakout always fails. First minor pullback, expect the lows to be tested. So it's going fine, but how far can we go? Can we actually break this? We might, I don't know. I like to see market come down to here. What about reversing back up? Can we actually reverse? Because look, down, up, down, right? So we can actually reverse. There's a wedge bottom there also. So we're in a buy zone, but we need a buy signal bar. So the one thing that the bears failed to do here, even though we moved underneath 53.1425, is they have not taken the 53 low with a bear body. So can we actually reverse back up? Could this be a double bottom neckline? Yes, but we need a good buy signal bar. You cannot buy this thinking this is going to go close above 14.25. If it doesn't, it could quickly take out the 53 low, and then okay, see, it's already happening. Now, if this bear body closes below 53, bears will sell even more. But it's a trend line test. We need a trend line break. Probably buyers will show up again. I don't want to sell here, to be honest with you. Market is trying to come down to 53.05, 5300 area. It can reach there, but it's a buy zone, and we have a wedge bottom. So now I'm looking for another better higher low, and a reversal back up to the neckline. So this doesn't concern me anymore. Or some kind of a buy signal bar right here would be great. I cannot buy this bar without closing, so I have to wait because it can come down even further. And for bears, target is 0550. We could test 0550 and then bounce. 5300 is always a magnet, round number. 0550, 0525. Like to see a test if bears can manage it. No buy signal bar. We have taken out the 53 low. Wedge bottom. We need to trap the bears. So bears still trying to reach the next 53 breakout target, and that is 0675. But then it can extend a little bit further to 0525. So market proved to me that it was a minor pullback, and we came back with a third leg. So now what? Well, I want bears to be trapped soon. Now, I still want to buy, but it has to set up. It's still trying to go and test 0525 area. That's 1 hour. I wonder if we can actually come down to 5300. I don't know. That's half R right there. That's it. I just scalped 0525. I sold underneath 59 and expected 53 test. And I sold a little bit more underneath this bar 60. And then my target was 0525. It went a couple of ticks under. It went actually 3 ticks under. No, I'm sorry, 1 point under. So I got filled. And I am out. Now I'm looking for a reversal. But we can continue to sell in here. That's the 2R measured from these 2 bear bars. Why am I measuring that? This is a failure for bears, another failure. This is a failure for bulls and a failure for bears. So failure of a failure, swing can set up. I'm looking for 2 bear bars to print. So we did right there. Some will measure from here, but there's no need to do that. That's 3 bars. This is it. And we took out that low. That's a breakout. So now I'm looking for a 1R and I'm looking for a 2R. Normally I look for 1.5 rejection or failure. So I do take a lot of profit there, and that's where that came from. 0525. I'm going to buy a reversal, but this is still coming down. This ended up becoming a bear flag, right? So you have failure. You get a wedge top, which we also traded. So you have you can say like from here to here, double top, that's a bear flag. So the market is extending down, but it's going to reverse soon. Is a little bit more room to downside. 5300 is nearby. That's a 2R. Let's see if the market can get there. And I'm actually, it's a conservative. You can put your stop above 52. I'm sorry, bar 50. is that would be your 2R. Wow. I mean, this is pretty neat sell-off. So hopefully you guys exited here is underneath 57 or even latest 58. If you haven't exited, then 59, you got to take the loss if you haven't. I already scalped there, and then that was it. I did not want to buy into that gap. That bear gap scared me. And I don't think these bulls are going to be able to close out. Look what happened here. Remember that bear gap? I measured it, and I said that 50%, we're probably going to test it, and there are limit sellers waiting there. Look, all those sellers entered. Now you get a good sell signal bar. You can literally, if you haven't exited, exit underneath 57 and sell. Okay? That's limit order bears entering. That's stop order bears entering with the exact same bar. That's a swing. Okay? Yeah. I think Tim is at the airport waiting for his plane, checking out the market. Very nice. Yeah. So I didn't measure it, but that's 15 points average. It might get 20, but I measure from the pivotal highs and lows, so then my 20 would be right there. And that 20 is right around where the 2R is. So let's see which one we're going to get first. That is beautiful price action. Well, I think Tim was waiting for this, but it took so long. But he did say that this is going to set up and you're going to get a good entry. So it worked out pretty good. Don't care about this anymore. Opening range, measured move target we also met. I'm looking for a 20-pointer here from the pivotal level. Or you can count from underneath 57. I'm sorry, 57. I don't know if we would go there. This is where I'm more like prone to take a profit. 20 is right there. Could go a little bit more. It's moving pretty nicely. Okay. I guess it's trying to get there as well. That's L's 20 point. But I don't do that. I do it with a 10 point and a 15, but for 20 point, I don't do that. I measure from the pivotal level, and that's 2R, I'm done. So you take a profit and you're done. We did reach the 5,300. Can market reverse? It is bar 60. It is possible that it might actually reverse. But again, you need a good signal bar. I mean, give yourself a credit, Tim. You did fantastic in here, right? It's Murphy's Law. As soon as you leave, you get a breakout. So, okay, so. I don't have a good buy signal bar yet. Market could sell further down. In fact, bears could reach around 52, 89, 89, 50, 52.90 to 52.89 area if they wanted to. But I'm not buying anything here. They are going for that 20. Good for them. Could get another 5 points underneath before reversing. I'm not buying this. I am timing. I'm going to be patient here. Market is still selling. If they're selling, you sell with them, but get prepared because soon it's going to reverse. These bears will start to take profit eventually. May not be a reversal, probably would go sideways, but that's the profit taken reversal. and could give us a 10-point. Really beautiful price action. I mean, bears did fantastic here. Let's see. Could continue down a little bit more. Not a good buy signal bar, 62. Even if we go higher, we're going to return back to that bar probably. So that's that 10-point I've been talking about. Market is trying to reach the 10-point area. 9-point is 0575. 10-point is 0675 for bulls. Tight bear channel. Bulls are having a hard time. It's because who's buying here? Well, really, the bears are buying back some of their short contracts. So other bulls have not yet entered anything. So they're probably, this could come down more. There's a measured move target here, 92.25. It's difficult to buy the first bar you see or the first reversal you see. So bar sequence is basically these Elbrooks's reversal bars, right? Or continuation bars. What makes a continuation? You know, which bars need to set up or line up to give you continuation, especially in the open. Like in the open or at the open, I actually look for 3-bar reversals, right? Here is a 3-bar reversal. Bar 3 is the breakout bar, goes beyond 1 tick lower than 2 and closes a very strong bar. To me, that's a breakout. I can measure a measured move target, right? So that's it. Then I would look for, like, here's a sequence, right? Inside, outside, inside, right? Or outside, inside, or outside, inside, inside, or outside, outside. Like, these are all bar sequences. Or is dojis at the top, of a trading range. Dojis at the bottom of a trading range, which signals a bad breakout or failed flags, right? It can reverse. So they're all in the books and in the course. You just have to then go into the charts and start looking at what kind of combinations or sequences do you get at after 3 wedge top or 3 wedge bottom or double top, so and so. And then you start to see them. That means you have trained your eye properly to make a decision. Similar situation is also happening here, but in order to buy, you need this bar to close bullish, then every other bull will buy the close of that bar, something like this. But this time it could actually work a lot better than it did here. Limit bulls already started to enter underneath bar 63. So the stop bulls are above 63. They are going to lower their buy stop order 1 tick above 64 as soon as this bar closes. Market order bulls will jump in with the first bull close. If the 64 closes bullish, they're going to jump in with market buy. That could fuel the move up. I have a buy order 1 tick above 64. I did not buy with market order. And I will cancel the order if I see bears take out the 64 low. Bulls are not trapped here. Okay, we have to have like some kind of a double top with 63 to say the bulls are trapped here. They started to buy slowly. Excuse me. They started to buy slowly, but no bulls are trapped here. Okay. They're buying into the profit taking by bears. Not many bulls are entering just yet. And you can see that no one wanted to buy the close of 64 is fast enough. So because nobody wants to buy against a tight bear channel of 1, 2, 3, 4, 5, 6 bear bars tight channel. So they're looking to see, is this gradually going to start building? So what you do is, to be safe, I put my buy stop order 1 tick above 64. If the bears cannot take out the 64 low nor 63 low, meaning they cannot close a bear bar, then I'm safe. I have a higher probability of bulls reaching the 9 to 10 point above. 9 point is 0575 and 10 point is 0675. Yellen is speaking, I think, Treasurer Secretary. Again, market reach all the way up here. First, it might need to close this gap right here, and then pull back and buy again. If the bulls close this bar 61 gap, then they're going to test the bar 53 low. Then they can accelerate, and this will be their target. I don't know if we can make it there, but it is the first logical pullback bull target. So we need 3 bull bars stacking by the close, smaller the better, for bulls to start to build a bullish pressure. Okay, so if this bar closes bullish, we have a gap up open with 64. We should get a leg or 2 up. We now have a third close. All 2 are 64 and 65. Now we get another bar, and that's right there is a good sign that the bulls will try to close this gap. That means they're going to want to overlap with the low of bar 60. Okay, so I bought and I scalped and I'm holding a runner just to see if they're going to be able to close this gap. So yeah, I timed. What the heck is going on here? Oh, here. Sorry, my application broker is doing funny things. I thought I closed the order, but it gave me a much better price. I like those surprises. Okay, so this one worked fine. But you take profit at around a 10 point, so they just reached a 9 point or 575. Could accelerate up to 10 point, but this is obviously a profit taking area. So up on this, down on this, up on this. We might need to come down before going back up again. You can see that the bulls are trying to close the gap. So that means you want now this area to be tested. There will be sellers waiting, but eventually market is going to want to get up here. Trying to find something. Yeah, right there. Or somewhere here to there. Oops. 53 low test I'm looking for. So what's going on here is bulls are closing the gap. So now what you're going to do, you're not going to buy that close. If you do, they're going to trap you. You're going to look for a pullback and a wick, and then you're going to buy. Okay, your stop is going to go under there or here, and you're going to look for 1R, 2R, whatever. 2R could come up to here, or these highs to be tested. I've already scalped. I'm already in the long trade, but this is resistance, right? So it's going to come down. I'm going to hold a runner into here. So when it comes down, I'm going to buy again, okay? And I'm going to look for a follow-through buying. But if you haven't entered, that means better not to buy this, wait for it to come down. Maybe 1 or 2 bars later, you can buy. To me, that was a bear flag setup or head and shoulders. So you always look for a bear flag in a head and shoulders. It was really, you could say that this was a failure, but it was really a wedge. Okay, breakout. So you had remember I said we now have a triangle when we were up here. I don't know if anybody remembers, I said we have a triangle. This is a breakout of a triangle, a wedge. And the first breakout, retest, and then swing, right? So, and I said, if we cannot get above 53.30, then you're going to look for bear bars to close underneath 26.75, and then you can sell. So yeah, I mean, there's always a wedge somewhere, but this is not a good wedge setup, is it? To buy. So that's your first breakout. You get a follow through, pull back, and then you can sell that pullback because you got a follow through with bar 53. We're testing the 53 low. Is good job, bears. You can also say, okay, so you see this. I don't know if that's what you were asking. What was the count? You had 43, 53, 60. Oh, so no, my wedge was this one right there. Is 34, 43, and 53. That was not it. This is already a breakout. So this was, if you're looking for wedge failure, that's what I was looking for. I read it like this because basically that's a wedge too, and a breakout. That's a failure is there, failure is there. So you sell the pullback. But that's, to me, look, we made a new high, came back down, pulled back. We did not make a new high with bar 40. So I'm going to use this low and that low and that low, and if we break it down, right? So now we're going back up. So yeah, you're correct in your thinking. Really good bar, right? Everybody else, both down here, stuck. They both lower. They probably couldn't get back up here. So what do? They look for a good buy signal bar. 65 is okay. It's the second entry long, but it's small. Then you get the breakouts. Everyone is going to buy this bar, but in my experience, a bar like this will trap you because it's testing a breakout test area already. So there are actually sellers here. So what I generally do, is wait for this. I mark the gap first. I wait for this bar to close, this first pullback bar. Then I mark this gap and I look for bears to sell even more and somewhere in the 50%. If I see buyers entering, I put a stop here and I go long. So this is where I take a lot of profit and I wait because market basically reached 14 plus point is average profit taken. They extended the 10-point swing. They might be looking for a 20-point, but we have to pull back first. Okay, so the gap is formed. All right. So somewhere here, I'm looking for let's see if we can actually get down and test this. If we don't, then we don't. We start to take out the 66 high. Bulls are going to push this, but I generally wait for that pullback because I want to enter with a better price. I don't want to enter this high is closer to the EMA, but anybody who bought above 65 expected an EMA test and took profit. This is a really good bar. It probably is going to push the price above the EMA, but not much of a room there, so I prefer to buy lower. So if I buy right now, I'm just worried that they're going to trap me. But so far so good. I guess I'm not going to get that price. Bulls trying to get above the 67 so they can get their third leg up, but if they fail to close that bar one tick above 67, then the third leg is not going to work out. We might need to come back with the pullback with a couple more bars and then get the third leg up. So you see, this is why I'm hesitating. There wasn't much of a room above 66. I just find the gap. I mean, they're so, they're there. I mean, you can see it, right? So I found my gap bar. Trend bars are gap bars, right? So gap bars or trend bars. So I find them and I determine is if those big gap bars are happening after 2 legs down within the 3rd leg, that's right there is induced, right? So we don't use that word. So the word that we use is market makers own. Bulls own that bar. So I know that they're going to try to close it so they can make money, right? So I'm going to target that gap. So where's that gap? Look, gaps can be from the low or the close of that bar to the prior, to the next bar's close or the low, or some kind of a magnet. I don't know. Or I like to look at is 3 bars, right? So this is the bar gapping down. It started to gap down here, but I'm looking at this. So everything's gradual. So I'm looking at the first gap. Maybe from there, I'm going to take that because bulls already closed some of that gap. If you measure from the 3rd bear bar's high, 62's high. But the bulls closed some of that gap, so your gap is right there. And then the bulls close the rest of the gap, so they own the bar, right? They're showing you that they own the bar. Everybody else sold so low, stuck. So they're forced to exit out of the market. That's why you ended up getting a huge bar. So now is I want to buy. Where's the best place to buy? Bull gap areas, right? So that would be from the high of 65 is to the low of 67, or from the 63 high to the 67 high. I just make life easy for myself. I'll just mark what I see, okay, quickly. Okay, so the bulls now in their 3rd leg up. 67 is the pullback, so this is now going up. But it's only the 3rd leg. So what do we need to go further up? We need a 2nd bull bar above the EMA. I mean, it's kind of a bummer that we didn't come all the way down here. They're already buying. I'm kind of late. So, and right at the EMA, I don't know if I want to buy. I want to wait bulls to actually get above the EMA. With a 2nd bull close, then yeah. But this can still pull back, and I'm kind of late getting in. So I already did very well. I don't want to risk anything because you're buying also. Like you're at the almost at the 66% pullback, right? So we know there are sellers here. They will defend this area. So it's kind of late. So I prefer a better entry lower with a better price. Okay, so you can see that we just pulled back, but are we going to come down more? I don't know. I have to wait for the bar to close. Bulls are still pushing towards where I marked, which is that green line or the green zone. We need 2nd bull bar above the EMA to become always in long. We might have already become always in long. We just need the confirmation that the bulls will buy every pullback and get us up here. So then maybe leg 1, pullback. The whole thing is leg 2 since we didn't take out the prior bar's lows. Then pullback leg 3 could get us up there. There's also, maybe I can take that low, but I'm going to take this low. There's measured move target there. Or you see how it lines up? Like we could go slightly above that. But I haven't entered. I haven't entered a long. I'm still waiting for 0525 to be tested. Outside, inside, 68, 69. Test of the lows outside bar 68. Bulls are trying to trap the bears here. Too many bars passed and we have not. It's been 20 minutes almost. In 3 minutes, it's going to be 3.5 minutes. It's going to be 20 minutes past to test the 0525. So when 20 minutes passes and something I want it to happen doesn't happen, I kind of lose faith in that side. But still, that open gap is beautiful, strong enough for bulls to show up in there. So I'm just waiting. Many bulls already laced this area with buy orders. Can bears sell even more? They're gonna have to close this gap. They start to close this gap, then yes, I'm gonna put above that gap a sell stop order, and I'm gonna sell. I'm gonna target this low, take profit, and I'm gonna target even more. And my next target for bears would be around 52.86 is 87 area down below. But first, I need to see what bulls do here. Their target is up here still. Okay, we have, let's see, we have 40 minutes left for market to close. I would love to see market to come down more because 69 didn't close above EMA, but there's room to upside. We didn't test my area. We did retest the top of that zone, but is it good enough to buy? I mean, it's pretty good so far, but I'm not buying this. It's gonna go without me. That's okay. Sometimes I get very tired because I've been trading since I think 9 a.m., maybe 8:30. I started early this morning, and I'm just so tired trading. Sometimes I see really good setups. I just don't have the energy to get in and structure a trade and do all of that math. Brain, just slows down. So I prefer to use the rest of the energy to reading the chart, finding the targets, and for you guys. So I might miss this, but it's okay. Sometimes, if you feel like fatigue and you don't want to take the trade, even though it looks really good, don't take the trade. Because there's nothing worse than that frustration, okay, when it goes against you. And it will go against you, so it's tough. It's difficult. That's why we take breaks. So when you don't hear, Brad or me or Tim, although Tim Fairweather is like a machine gun, he never stops. And Tim Stout is very good too. Is I take breaks and Brad takes breaks and we get tired. It's fatigue. It's difficult. So bulls need to close a bull bar. I mean, it's nice that they are testing above 70, but if they get that bull close, they're going to accelerate up. But look left, right there, right? Bears got stuck, sold above it maybe here, and then sold higher, came back down and took out the 53 low. So there are sellers here once again, right? So be careful here. I didn't buy this. You had a ledge top, but they completed the ledge top very quickly. So what will happen is that we come down and then we go right back up again. Bulls need to close above there and get follow through, but this is the problem. So what does it look like to you? It is a spike pullback channel, right? It's a bull flag. Some will say this is actually an expanding triangle bull flag with an apex right there. It's going through the high of 66 close of 69, open of 70 is your apex of the just about triangle, I think, somewhere there. If bears start to close below this line, they will come down into this area. They can accelerate selling and fix this imbalance, and suddenly we can become bearish, but I doubt it. If we start to close bull bars and use this area as support, this is where we're going. First here, we have to breach through the 1325, and then that area above. As far as I'm concerned, bulls can actually bring market all the way up to 53.30 area. Can go right back up around here too. But first we need to take this out, then we could go test this high, maybe there. Okay, so they're using the apex of the expanding triangle as support. They're trying to close that bull bar, okay? 1325, there are some sellers waiting there, but if we breach through it, we'll go higher. Starting from 1325 to 53.15 to 1325 is sellers might be there. Be careful. But they can buy the pullback and reach the target, which is right there. There you go. Woo! Okay. We're just testing the mid last week. Again, here we go. We have, I'm going to talk about the daily chart. I actually, at the open today, I told everybody that we are going to sell. Here's what I saw there. Let me talk about that a little bit before I forget. It's the same thing that I do on 5-minute chart or any other chart. You see this is inside, outside, inside combo, right? So you have inside, outside, inside days. So basically I'm measuring this big outside down bar, and we have these inside bars. Friday, I think that was Friday. Well, I don't know. Is it Friday? No, that was yesterday. So yesterday. So think of it as Friday and yesterday, half day, one big bull bar, right? So look where we are. This was a bear bar, very strong. Look, market found buyers right in the limit, lower third. So where do you think they're going to go test? Right here, upper third, limit zone, right? Starting there. It could extend all the way to up here, but generally, quickly it finds sellers there. So I told everybody at the open, we're going to test there, but sellers are waiting. So expect market to come down, test either that bars or Friday's lows, okay? And Fridays and before buying anything. So therefore, today can actually extend into here. So if you're going to want to buy, don't buy here because this is going to sell. This is a sell zone right here. So put buy orders starting from right there, okay? And here, first we came down here. We bounced, tried to bounce a little bit at the 50%. Never happened. So I sold, I took profit there. Then market started to sell even more. That's where sideways market, after Tim Stout left, started to expand. But lay of the land, everybody. Once you have it in front of you, you know where it's going. You can literally lace this area with buy orders. It goes up, you make money. So that was the whole thing. I actually called this way before market opened. I posted, told everybody, don't buy anything here. We're not going up. We're going to come down. We're going to test this day's low. We're going to probably come down and test this day's low because this is how, and this is where I want to buy again, right? I sold, took profit at the mid level of this bar, this day. And then, you know, I hope you guys bought because I did buy here. Bears want to come down and test this bar's low. They want to extend selling all the way to the EMA, possibly come down to here. As if we do tomorrow, we're going to trap the bears underneath that big upside down bar, lows twice. So it's not going to be a clean breakout. But if we do break out, right, we could still reverse the next day. All right, so we did reach the 53.13, and I said from 53.15 to 13.25 is resistance. We're probably going to go because this is basically your third leg up, okay? You don't scale in here. But we left this behind, which is kind of sad. So here. It is coming down now. Now, what about the bears? Can they actually sell? This area is still support. I would prefer market to come up here and test this area. But that means in about 40 seconds, bulls need to either reverse this bar and close at about 13.25, or the next bar needs to buy the close of this bear bar and reject it and fill the upper wick and close a bull bar. It's coming down because I said sellers are there, right? Right there. Why were the sellers there? Well, it was a triangle in a way, right? Sellers are there. Market is trying to go there, but look what happened here is many bought there, stuck. They scaled in lower, or they scaled in with this bar. So that's your 80% break even. Is 60% of the time probability it can actually go into this area where they originally got stuck. I do believe the market is still trying to go up here, but you get this pullback and then that low is taking out, that entire bar 53 becomes your sell zone, this entire bar, right? So you can either take the entire bar. If it's a big range, then just only take the body, okay, or close to high, whatever. So somewhere around 50%, right, is sellers are waiting. So that's why I said we're going to go and test there. But I don't think the bulls are done here. We need to tag this area. All right, so look what happened here. They couldn't close the bar 72 in 40 seconds above 13.25. But they did buy, I said the next bar, they're probably going to buy the close of bar 72. So they did buy the close of 72. Now they're trying to go and close above 71 where they entered long and got trapped. Now we close above 13.25. We're going to go extend into my target above. Hopefully they can fill that upper wick or at least close a bull bar right there. The moment they close a bull bar here, more bulls will join. We're entering the last half hour of the day. So we've been going sideways. I want to see how market is going to fare here. We have an inverse head and shoulders pattern here. This is the left, this is the head, and this is the right shoulder. It's a little bit down though. I don't like this kind of setup, but that's okay. As long as we can stay above 53 low, this is where you need to take profit. We could come back down from there, watch out. But if we start to take profit and get back above, we're going to go up there, and we're probably going to go up there. So the triangle breakout, the apex of the triangle, okay, maybe like that, small, that, and that, not really connecting well, but this is where market is trying to go. How did I find this? Well, there's a huge wedge here, right? Leg 1, pullback, leg 2, pullback, and leg 3. So this is the first pullback, and this is the second pullback. This is the so from that to there, I connected, and that's it. And I did it conservatively, in fact. Actually, you should be having this. So in fact, we could actually reach that projected target. Somewhere in this area we're going to tag. There are sellers here. They're trying to prevent bulls from getting there because they know if they breach that and get in here, they can easily reach there. So what do the bulls want? They want to close above 53. Okay, that's the last strong bear bar. They broke the sell. So, and then bulls bought above 55. Remember, I bought above there and I got stuck. Well, I didn't. I scalped and exited. So that's where the bulls are going. So that's your bullseye right there. But sellers waiting. So hopefully we can tag one of those lines. So we didn't reach tag the inside the zone, but look, that right there is your buy. So you could just put a buy stop order above, you would enter, and you would hold. You would hold into the prior highs. Is there, possibly there. So I want to see bulls do a lot better than this. This is not, you got an inside bar 73. You have a bull flag expanding up. It's good for the bulls, but it's not a good trend because you got big bear bars and a bull bar. But look at 73. 73 is saying something to you. I'm an inside bar and I closed very high, and therefore I'm rejecting bears. Okay. But what do we need then? We need a follow-through bull bar with 74. So, but since we've been pushing up with the third leg, right, you also have to count how far this can come down. So if this is a leg 1 pullback, leg 2 pullback, leg 3, eventually market wants to come down and test this trend line. Either that one or... So bears want to bring price in here somewhere. But bulls haven't really taken any profit. They need to either go and test here and then come down in here. Support, this is going to act as support. Or go in here, close bull bar, go the next one. If we start to build above the upper trend line, good luck bears. Everyone is going to exit. We could accelerate up. We can make a new high. But open of the day is target at the moment, is if we can extend it that far. I'm more interested in this area. I actually did enter to take the trade. So almost there. Are you kidding? So close. Come on now. 1750. Set one tick. Huh. Well, I got in somewhere in the bullseye, but it's not perfect. It's one tick failure. Well, the bar hasn't closed. There's plenty of time. 2 minutes and 23 seconds. I think the bulls are going to make it. So how'd you guys fare here? Did you buy, hold? What did you guys do? I did say that we tested the zone high, but if that's overgetting, if they lace this entire area starting with the buy orders they cancel these out, added more, maybe even more, right? So up here. That's a one tick failure of my target projected line. It just fell short, one tick. It's a bummer. But it's not over yet. There's still 1.5 minutes. The bulls can accelerate and get into that bullseye even better than they did with this wick. Bears want to bring price down to this area, but they're going to have to close strong bear bars. Strong bar 73, probably lower third, buyers waiting. We'll see better prices up there, better location. See better prices up there, better location. They want to overlap with bar 49. So if you bought here, if you were stuck here, you bought above or the close of bar 66, you got to break even, right? So let me get rid of these, right? So get rid of, what else is there? Oh, okay. So pay attention to so if you are long, maybe right there, totally got stuck, maybe bought again, right underneath. and then you wait for a strong bull bar, such as bar 66, right? Maybe you buy one tick above, even you bought one tick above, look, market gave you a break even, right? Technically, I met my target. It's a terrible bullseye, but we could still go up. We could still find the center of that, but it worked. So that was the break even, 80%. Now the 60% probability, we can go right back to where they enter, maybe there, right? Maybe originally they entered here, and then they entered above. Oh, look, exactly break even, right? So that 80% probability worked. So what do the bulls need? They need to get in here, break above, get back up to these levels. But I don't know if they can do it. It's been a terrible move up so far for bulls, but they did stretch it pretty good. So I've taken profit. It's not a good sell signal bar, but it is okay. These bulls start to take profits. I'm kind of bummed that they couldn't really. Maybe I did it wrong. I should have snapped to the bodies. Yeah, I mean, that's after the fact that, maybe that's what they saw. But I don't like doing that. It's just too much. So, it is what it is. It came very close. One tick is one tick. What else market can do? Well, it's trying to come back in here, but probably buyers in here. Outside bar, inside bar, 72, 73 is bears want to take out the 72 low. Buyers waiting there to trap them once again. Bulls really didn't get their targets. This one's left behind. That one's left behind. As far as I'm concerned, we can even go up here. That's this. Now, how would that happen? Well, it's the end of the day. So institutions need to come into the market strong. That means that's with the close of bar 76. We're going to have to wait. So this is bar 75, and it's already breakout pullback. So as far as I'm concerned, if the bulls do show up, we could test this upper line and then go test the 24.75. We start to break above strong. Open of the day is going to become magnet again. And market maybe can make a new high today, but this move right here makes it difficult. Okay, so this is where I would stop, not trade anything, because what the market can do, it could come down, everybody sells, and then go right back up and do this. Okay, so you start to sell, and then they reverse it, and you lose everything. This is where I stop. Yes, it seems like it, right? So, but patterns can fail any given time. So I am definitely done with trading. Just checking to see. I don't have anything lingering on the chart. This is the power hour, so you guys need to pay attention to open orders. Dangerous. Patterns can fail. Bears can sell. But this area is support. I like to see one of these lines tested before we go up and trap the bears selling. This is bar 76. Institutions only enter with the close of 76, 77, 78. Sometimes you don't get much of a difference with 77. Suddenly 78 becomes very volatile. So I like to see this area tested now. and then trap everybody and then go up if they want to go up, because we left these targets above here. I mean, we're sideways in a sideways price action. Am I bearish? I mean, look, these overall, market has a head and shoulders pattern, right? So you have, second leg. This is leg one. Pull back. Bears are trying to get a second leg. They're trying to come back down to the EMA. Market probably wants to test the EMA. There's a breakout test area, right? Is from here to here. EMA is right there. We could come down there, but that's probably tomorrow. Okay, so what do we need there then? Tomorrow we need market to go up. Say we close like this. We need market to go up and start to sell like this. Maybe go up, sell, but happening in one bar, right? So, and then come in here and close. Or we come down tomorrow, we go sideways because it is sideways. How do you sell a bear bar? You need to go up and test upper third a little bit, or it's the middle. So it goes up and then comes down, and we close somewhere here. We close below those red lines. The next day it could pull back and then sell, reach this area, and then we trap the bears underneath this big bear bar. So yeah, market could be bearish, but right now we're not. So I'm trading on a smaller time frame. I can trade short, I can trade long, right? So because on the 15-minute chart, because we have a strong move down, right? What does the market want to do? I like to see tomorrow come back and test somewhere here and make a double bottom and go and test here. If this area then becomes bear zone, like a sell zone, we could also swing from there. So what we need the moving average to come in like this. We get either a wedge top or a double top and then swing short. So that, to me, on the daily chart, like coming down, moving up a little bit, is yesterday's range, and then selling higher. Nobody wants to sell low, everybody wants to sell high. So this would be a really nice swing trade for bears tomorrow, but I don't know. We'll see that tomorrow. Tomorrow morning, I think it's Tim Fairweather no, wait. Who's doing tomorrow? I think maybe it's Tim. Somebody is in the morning. I'm in the afternoon. Yes, Tim Fairweather will do in the morning, and then I'm going to be in the afternoon. And then Thursday, I'm in the morning. And on Friday, I'm in the morning again. And everybody else is going to be in Florida. Whatever. I'm jealous. Hopefully they will send me lots of photos and videos. I'm waiting for bears to test that area. It's only half a minute left for this bar to close. Watch out. We could find buyers here and reverse right back up. Bears want to break out from the low of 72 and come into this area, test this area, but this area is support. So this right now, right here with the close of the bar, institutions will move market and do things, very weird things. So this is how you lose your account or your entire day's worth of P&L. I've done it enough to not get involved. What is the fan favorite? What do you mean by that? You mean like which stream is your favorite one? Is that what you're saying? Everybody knows what the answer to that. Come on now. I'll probably come in like last 10 in the list. Because I'm not there. It's okay, they can run around wild. See, that area is acting as support. If anybody put a buy stop or limit buy there, scalping already. So if bulls can close this bar bullish, that's actually a bull flag. you have several bull flags, right? Here is a small one. Here's another one. Here's a third one. Could this be a final flag? If it's so, we could go up here, then we can come down. I'm fine with that. But market could reach this area, this small triangle, where the bears started to sell strong. Yeah, I think they're trying to overlap with bar 49, like I said earlier. Is that what they do? They disappear after 10 p.m. You can't find anybody. See, I'm glad I'm not going there because we be partying every night by the pool, who knows where, Orlando. I'm glad I'm not going there. So, anyone trading with the institutions is looking for the bullseye. Test it. We got a magnet up there, which is open of the week. Open of the week is measured from, unfortunately, the holiday. So that doesn't count. It should be today's open. So the open of the day, open of the week is the same price up there, and we could get there. So because it's the end of the day, there's only 8 minutes left. There's plenty of time for bulls to actually break out and reach bar 50, 49 or 50. So did anybody buy in here? I said buyers are waiting here. Hopefully you guys, somebody did, right? I'm a chartist. I like to chart. So I like to make my decisions with what I see on the chart. But I will pay attention to institutions. But most of the time, institutions will do exactly what I see. I mean, there are times that they will do some wild things, but we left these behind. So you find your support, and if they're buying at the support, that's because they're seeing the same thing that I'm seeing. Excellent. Ted is making money. All right, we finally met my target to the tick. Look at that. We left that behind one tick, failure. We finally met. But I don't think the bulls are going to be done here. I think they're going to accelerate now. So all they have to do now, close above that lower dash green line. If they close that body, next 6 minutes, 5 to 6 minutes, they can accelerate into the upper trend line, which is projected target. That'd be beautiful. But remember that line that I had earlier and I said that that is an attractor line, and today is a day that we're going to keep going back to that line, right? So we're back to that. I removed it accidentally, but right, so right there, look, we went above it, so now we're bullish. Where's your good buy signal bar? I don't like it when it starts to buy from here. That means we could get a deep pullback, but everybody else is buying above it, 77. Because look at this. See this? 44, it's a similar thing. It could suddenly collapse. I don't like that. I like it like this, or even smaller the better, closer to the better. I don't like to buy it if it's gapping up. If it's like this, smaller the better. So this would scare me, right? So yeah. This is still the target. You should scalp a little bit because we're in my target zone. But if we break above it, this is where we're going to test that upper trend line. It's like a similar situation. You see this right here? I'm doing the exact same thing here. So basically, this is now the attractor line. So when the market gets there, it's attracted there, and then there will be sellers waiting. You're welcome. Well, 2 people were brave. Good job. I'll take a few questions before I end the session. So the reversal bars, right? You should study the reversal bars, the signal bars, trigger bars. So this is what you should be studying. Bad signal bars, good signal bars, reversals, continuation. It's all in the course. I fixed the link. I replaced my, it still doesn't work. When you right click on my profile image, there should be the link to join. Are you saying that doesn't work at all? I'm gonna have to fix that as well now. Okay. Yeah, BPA rules also translate the tick charts. You can definitely, oh, there it is. Whoop, whoop, there is. Oop, there is. Here's my target, and here's the next one. Oh my gosh. Ooh. Ted, how do you feel right now? Ted's like, I'm out. And then 3:55, he leaves the market, and then this happens. Here's the open of the day. I mean, we could make a new high today. Hello. I think they're up. We just ran out of time, but they can still push. But I don't think we're going to get above open of the day. This is where we stop, I think. Let's see. Yep. When the bell rings, generally open of the day this is where I collect everything. If it gets above open of the day and continues, that's because it's seeing some kind of a magnet. That magnet was this high right there, right? It's the Friday's high, right? So it's right here. They're trying to close above it, and market can still go until 5 p.m., but this is where I would be done. They're trying to make a new high. That means they're trying to close the day above Friday's high. Wow. I mean, look at this. Buy zone. I do this on a 5-minute chart. It's the same mother bar technique that I talk about, right? Inside bar, right? Stop underneath. They actually tested here, or stop underneath here. So tomorrow, can we actually get a bullish move? I don't know how this is going to close. Is by 5 o'clock today, there's still in 59 minutes. If this bar closes somehow bullish, I doubt it, but if it does, this is where market is going to want to test then. And we could even punch through and go and test these highs. I don't know. Without taking these highs, market is not going to seek these highs, right? But we're inside trading, so this was a really good buy zone. Same thing, right? Buyers are waiting there to trap. What about tomorrow if we come down and test? Yeah, if we start to sell tomorrow, you want to see market punch through, go and test here and here, and then go and close around here. Then the next day, we might actually sell more. But, I did say that early on this morning before market open. If you don't do anything all day, at least have a buy order there so you can buy that low. So we tested the Friday's high, but we did not close above it. So this is where you would take profit and you're done. I don't care what does. It's probably not going to go higher. It's done. Okay. My daily homework is I analyze these daily charts, daily bars, and then I look at the 60-minute charts where we are in terms of this last week's range. We tested the lower third of that range, which I said, if market breaks this area, it's going to retest sell. We're going to tag here. Buyers did show up there. This gap is still open. Where do you think the market is trying to go? Bulls already closed that gap. So that means market is trying to go up here, possibly even test it. I don't know if we're going to be going up there, but So your sell zone is actually this bar right here, this hour. This is the first sell. We're going to test. We might get a sell signal tomorrow, and we could swing back down again. So that means we get a wedge top, 1, 2, and 3, and then test of these lows possibly, and we could actually come down and test the last week's low. Okay, it is possible that can happen. All right, so watch out this bar, this hour right here. I'm going to mark that, so tomorrow we can pay attention to that. In fact, I think I'm going to mark the whole area. And then I study the 15-minute charts in the morning. I immediately find my Globex high, Globex low, Asia session, and I look to see what we have done above and below the Asia. Did we get a 1R, 2R? This is the Asia breakout. That is 1R. They couldn't even close consecutive bars. They couldn't even close any bull bars above that. And then it came back into the Asia range. So now I'm looking for the breakout to the downside by, again, using the Asia session. And look at that, 1R, 2R, 3R. Came so very close to 4R. So that I'm going to count it as 1, 2, 3.5 exhaustion and reversal back up. Where? Back into the Asia range. Okay, so I study that in the morning, and then I go to encyclopedia, find a day like this, or on the actual chart in the history I find a day like this. Maybe find a holiday and see what happened after holiday and then this is a bear flag, expansion down, right? So this is now turns out to be a bull flag, wedge bull flag. What did the market want to do? Probably take out those highs, and then there is an expanding attractor line, right? Maybe there. I'll do that better. Hold on. Maybe there. Or there. Market could reach there. If it's a bull flag, we want to see bulls buy and bring us up to here. Well, we have a huge trading range now, and those highs, last week's high, becomes that. Why does it say low? Oh, that is a mistake. Last week's high become the magnets. Okay. Support and resistance, that's the one you have to study. Minor higher lows, minor lower highs, major higher lows, major higher lower highs, lower lows and higher highs. Support and resistance those are the areas you need to study for buy and sell zones. Link worked? Okay, great, thank you. Okay. I am done with the session, but I'll go through. There's a lot going on here, so I'm going to delete everything. Okay, so we have markets actually went sideways. If you do not count this, okay, basically we have a trading range, right? We're in this trading range. Just think of this as a continuation of this. So we're testing the trading range highs and immediately coming down. So if you actually divide this trading range into 3 sections, right? I'm going to exclude that. Wick, right? We had a fake breakout. So don't look at here. Imagine this is not there. So from the close of Friday, right? Close of Friday, we get a gap up. we get a gap up, but that's a failed breakout from the trading range highs, right? So now you can actually is remeasure that. Okay, maybe I'll exclude that. Or it doesn't matter, just include everything, who cares? It doesn't need to be perfect, right? So here we go. This is the trading range, that's the high, right? So from the high, that's the low, right? You don't need to be scientifically correct. So now what do you need is, if you're in a trading range, lower third of your entire trading range is a buy zone. Look at that. Even if you include all of these, market comes down and dips and the buyers showed up. Where are they going to go? They're going to go into the upper third. So we end up going and going and going, but it created a bear flag. Excuse me for a minute. So it created a bear flag. In fact, I was counting, and it was insane. Here's a high 1, is high 2. That is a terrible high 3. This is high 3. This is high 4. This is high 5. 6. 7 is 8. My gosh. So I'm like, when is this going to end? So I started looking. Wow, okay, this is more than 40 bars. Market is going to break out soon. So what am I looking for? I'm looking for sellers up here, and I'm looking for sell bars, signal bars in the form of strong closes, right? And I'm looking for several legs to sell into the midsection, back down into the lower section. Market started to sell there. I'm trying to stay below these boundary lines. We got to look, we're going back, testing, selling. Finally, we come down to this boundary line. We breach below, they start to take profit. We go up there, but we cannot even get to that mid line. So now they're selling again, right? So that's it. But with the breach of this trading range, you're pretty much done. This is where I apply the breakout target levels, right? So here is the breakout targets. So we breached below. Okay, and then reverse back up. But now when target finding becomes the focal point, that's when I'm going to exclude, okay, is all of the wicks. Now you check that out. There's only one bar, right, moving underneath that target, but no consecutive bear bars. Then we have 2 consecutive bull bars, 64 and 65, and then the bulls reverse it right back in here, right? So I do pay attention to all of that. It's very important to me. But anyway, so we sell in the morning. I had targets, but you're selling into somewhere that market became bullish, right? But if you don't count this, then you're looking for what market was bearish, then it bought, right? There are a lot of bears probably stuck in this area. So the market is trying to reach that area. They reached somewhat and then started to go back up again. It's very difficult to buy this because you have a tight bear channel, right? First breakout, it's going to come down and test. Second time the bears are trying to breach the bar 7 lows, they fail. This is where you can buy and scalp. But when you look at left, right, so selling began right there. Mark the bar 1, the entire range, and look to sell. Here is your first test. This is the second test. Many sold and trapped. They're going to find a mid-level of this sell zone, and they're going to sell from there. If you're trapped here and you sell again, you break even. Look, they even came down with those bars to where they entered 25 low. They ended up actually breaking even before it went up. So now market goes back up there once again, but it cannot close bull bars above bar 1 high. So that means you have some kind of a wedge formation going on. Maybe 1, 2, 3 overshoot, undershoot, lower high, bear flag, and sell. You got a double top with, first double top was with bar 43.45. Then you have a double top with 45 and 50 high is, or you can say triple top. I don't care. I look for double tops above EMA. And I look for a good sell signal bar such as 51. You can put sell order right underneath there and then you will sell. If you didn't sell and you're looking for a confirmation because this is a trading range, you're worried the market is going to reverse back up, unfortunately, I don't think it's going to happen because you have, let me see, is leg 1, leg 2, leg 3, is leg 1, leg 2, the whole thing is leg 3, and the 50% is holding for bears. This is going to break out to the downside. It's already telling you. You don't need to expect bulls to show up here. This is going to expand down the size of whatever this trading range 1 time, possibly 2 times. So you can see right there, and I can measure it, right? So if I take just the bodies, not the wicks, that is 2 times, okay, 2R, right? So I excluded the wicks, and look at this, right? That's where the sell. First time they sold it, second time they sold it. Now they're breaking out. That's your 1R. That's your 2R. One of my favorite ways, it's actually pretty cool that they had this trading range. Plus it's more than 40 bars. So you know this is going to squeeze out of somewhere. 40 bars trading range. Eventually it's going to break out. You just have to find the signals which way it's going to break out. So I did say that this is going to reverse. Get ready to buy. On the daily charts, we reached the limit buy zone area, and then immediately buyers started to buy. So I found my target. I see this sell-off I see several legs down, right? Here's leg 1, pull back, is leg 2, pull back, leg 3. Then this happens. So what am I going to do here? Well, I'm going to recount. In fact, I'm going to call this entire thing complex leg 1. This is my first pullback. This is my second leg. This is my second pullback, and this is my third leg. And then I'm going to, from the first pullback starting point to the starting of third leg high, that is your target, right? And we breached it. So that means if we go and test and close a bull bar above the third leg starting point, then the second leg starting point is basically where you should be taking profit. None of this matters. Or you can say, hey, listen, I'm in a runner now. I took profit here. Market is telling me it wants to go somewhere. I'm going to target the second leg starting point, and I'm going to target the first leg starting point. And I'm going to hold my runner. Good for you if you do that, but that's how you get it. Not always you get that, but this was pretty cool. All right, so here I sold. I sold here, and I made money. Nothing's closing below. There's no follow through. And then I'm looking for stop below 7. That was my 1R target. I'm in a trading range. I'm not going to get 2R. I'm content with 1R targets because it's a trading range. It's a scalping mode. If I can get a 1R, I'm golden, right? So, and then we have this. I'm going to measure that. Maybe I can buy above it. My stop goes there. I'm going for it. They tried. Look, why is it so difficult to get there? Maybe I'm measuring wrong. Maybe I need to measure from here. Then I can say, okay, they got their 1R. They're not able to close above it, so I should look for a 1R for bears. I'm going to measure this. I'm going to put my target there. Here's my 1R. Here's my 2R. And then the market continued, but there was a reversal here, so I don't look for 2R, 3R, 4R from this measurement. Right? So here is bulls taking over. They're not able to get a 1R there. Or you can say, look, if I measure from here, I'm probably not going to get anything, right? So, so maybe measure from here. They got a 1R, but at this point you have to exit, right? You're not going to. There's a sell zone from the low of 40. bar 40 low to the bar 41. That's the first try. That's the second try is a swing, because this right here is 1, 2, 2 legs down. This whole area is a sell zone. Really good sell signal bar 51 is you can measure. This time I actually measure 2 bars and I counted that. So that's 1R, 2R, and then it's just 2.5, 2.5 with the 1 tick breach before reversing. So bears did extend the selling, but that's all they get. Okay, so we talked about that. I actually put it on the chart. All they had to do was to sell into it. And then I said we're reversing, so watch out. Is first entry, second entry, long. I said it's a spike pullback, so you are in a channel. This is a bull flag. It's going to extend. If we start to get above this trend line or the channel line with bull closes, then expect more higher prices. So good job, bulls. Very, very good. You can also measure from here, right? So here is your 1R. Here is your 2R. If you say, no, that's not what I'm going to measure, I'm going to measure the entire, you never get your 2R. So just measure from where buyers used as a support, then you get a much reasonable price to exit before this carnage happens at the end of the day. All right, everyone. I will see you guys tomorrow afternoon. You all have a great evening. And just find this day. This day has happened, I don't know, 100 times. I bet this chart exists in the history. And then look at the next day. How does it trade? We have a cup. We're performing a handle. Tomorrow we could pull back to this moving averages, and then we start to buy again. I would expect EMA to move above the 1 hour EMA, and we would become bullish. Or we're going to trap the bulls, and then we're going to come down. I don't know. We'll see. We could even go sideways. So they're parallel to one another. Bears could sell strong closes above the moving average. We could come all the way down here. That's a better handle. And then we could go back up, but if we form a double top, we could also come back down. So tomorrow is going to be an interesting day. Tomorrow morning to fair weather, and then I'll come in the afternoon. You all have a great evening.